Good morning, ladies and gentlemen, and welcome to the final All Access show of 2022 here on Friday, the week before Christmas weekend. Things up on All Access with what else would you expect? A little bit of a delay here. The schedule is going a little bit crazy. We've got people coming in, people going out. So we're making do. We're doing things as we will. We are, of course, going to end the year with a video from our sponsor, Ticker, who went through us all year long with All Access, was the sponsor for every single show. We want to thank them for being there. We're going to play that video really quickly here for Ticker one more time to show how you can get stock perks for the companies that you own with Ticker. And then we're going to go ahead and move into the rest of All Access.
What is Ticker? That's right, Ticker with two I's, just like you. Because it's for you, for investing, for stock perks, for connecting you to public companies who reward you as a shareholder, as a brand lover. That's why people can't stop tickering. Ticker, where investors discover shareholder perks and consumers become investors in the brands they love. Ticker. Start tickering today.
All right, you can get involved with Ticker at ticker.com. That's Ticker with two I's. Get involved with the sponsor for every single All Access show for 2022 there. We're going to bring on Mitch Hotch just to walk around the markets a little bit and get the news on what's going on. Our sponsor for the first slot of All Access this morning is running a few minutes late. So let's bring on Mitch Hotch. Let's get him into the studio, and let's find out what's going on in the markets. Mitch, how we doing?
What's going on, Michael? It's a good time right now. Good time indeed. I know that it might be tough in the markets right now, but as of lately, I've been seeing a trend that's been presenting itself, and that's small cap, a lot of times low priced biotechs that are making moves. A lot of times very similar to companies we talk about here on All Access, right? Companies with opportunities, right? And I think that the important thing is always learning about these companies and understanding their story. Because if you can understand their story, when the time comes that you do see it, pop up on our Benzinga Pro scanner, you're not overreacting there at that point. You know what the company does. You probably said, hold on, I saw this company on Benzinga's All Access. I understand exactly what this company does. I don't need to do a research. I need to go ahead and then look at the technicals and trade. I think that's a great outlook that we give here on Benzinga's All Access, is giving you guys the story. So at least that variable is cut out of it. You understand where they're looking at, what their drivers are. From that point, it's just about trading, right?
Hey, 100%. I agree, Mitch. And like I said, I think it's been an honor and a privilege for all of us to get to host All Access all year long, get the stories behind the companies, get the insights from the executives themselves, right? Not hearing the PRs, not hearing the fluff from any news outlets, but getting to talk to people face to face on the stream, figure out what's going on with them, and get their insights on the market too, right? It's not just about the companies, but it's also about the thought leadership perspectives from these executives telling us what's going on in their industries, what's going on in their sectors, how they're reacting to things, and how they're positioning themselves for 2023, which is coming up a lot faster than I think we all anticipated.
Yeah, it comes up faster than anybody anticipates. And the big thing I think on that is lining up, right? One thing I always say is that, does the technicals match up to the fundamentals and the story? A lot of times you need to be lining up the technicals with that roadmap. So moments like this where we can go through the roadmap, talk about what specific kind of dates are going to be mentioned here, is a very good way to look at charts and then start working towards understanding the investment a little bit more, right? If the stock is popping, but we don't expect any catalyst to be coming from the company anytime soon, that doesn't really make me the strongest, highest conviction trade. But if I know for some reason, let's say for like a biotech, that their phase 2 study comes out next week, well, I'm going to be paying attention to the company a little bit more. So once you understand the story, it can definitely give you an edge on the timing of the investment.
I agree, man. Could not agree with you more. Excuse me, still running some congestion from our event last week. I still have not caught up. My body is still a little bit tired from the New York events over there.
Yeah, New York can do that to you, right?
It's a hell of a city. It was a long 3 days, I'll tell you that much. I still think my sleep is a little bit behind, but we're almost into the holiday season. Christmas plans are coming up. We've got next weekend. Everybody will be heading out of town. I'll be heading downstate actually to spend some time with some family. So before that happens, before we go into full holiday mode, market headlines this morning. What's happening? I'm actually really excited because we're doing our weekly interview with Anne-Marie Band from the tradingbook.com later today. So we'll get some insights on some short plays that she wants to make next week. But as of this morning, what are the top headlines? What are we looking at, Mitch?
All right, it's easy. We can take a look at Adobe's earnings did come out today, and they beat on their earnings, so it doesn't look too bad there for a company that, is definitely, I don't think, going away anytime soon. A company like Adobe, right? So that's going to be definitely a stock to watch today with their earnings. Then there was a company that did get acquired. It was Maxar's Technology, and the reason why I'm bringing up this company, they got acquired for 6.4 billion by Advent International. It was at 129% premium at $53 a share in cash. And I think the fun part about Maxar Technology is that I found this company when it was a smaller company, not when it was, in the limelight and in the media. No, I found this story by doing the hard work, the deep research, looking into the industry in satellites. I thought that satellites would be something that, of course, as we got more satellites up in space, it could be a growth driver for the industry. And that's how I found Maxar Technology. So when you're really finding companies also in a show like this, I think one of the things to understand is what really is behind the trends, right? Is there a thematic trend here that you need to maybe be holding on to so that you can look up different companies that play into this part? Like Maxar is all about satellite technology and satellite imagery. Well, what has come out since then? We've had multiple companies come out from there. You've had Planet Labs, you've had Black Sky, right? And so these are the things that I'd be looking for, right? So if I think that, okay, like for a while there was programmatic advertising that was going to be a big focus, big driver for a little while. Well, Apple kind of ruined this a lot with the new advertising rules. But things like this, trends like this, is how I really like to invest, because this is not just showing you that you're investing in just one specific company, but more along an overall trend, kind of a generational move that you see moving forward. And this is really, I think, how you catch the big investments in your kind of portfolio. Let's say if you're looking forward out and you think that EV truly will catch on, why aren't you looking at what is going to be required for that EV big run, right?
Absolutely, man. Yeah, it's exciting. Like I said, I think there's a lot of potential to be made going into the holiday season here at the end of the year. This is the time where we start to see all the investors kind of pull back. There's less interest, less momentum, but I still think there's a few plays to be made here and there. There's some diamonds in the rough in the slow period right now. It's kind of just, like you said, kind of looking at the story of the company and finding out who's doing what, making sure you find those people that have momentum and just making the right calls, right? So there are some plays to be made. It's just a question of finding the right people.
Well, the question is, are you in the metaverse, my friend? Are you used any goggles yet? Have you tried them
No,
out
not
yet?
even close. I just had my first experience with Chat GPT last night, which I know is not
Okay.
necessarily the metaverse, but some of the stuff that's out there right now, the metaverse, this chat thing, like everything else that we're developing, way beyond me, man. I have no experience with that stuff.
Yeah, I mean, it's interesting. I mean, today JP Morgan upgrading Meta platforms to overweight and raising price target to 150. And I mean, I don't know. I don't know if, Meta is going to be able to come back. I mean, one of the things that I think they clearly saw and why they changed their names was that the writing was on the wall for their advertising business. They're not going to be able to target like they used to, get the results like they used to. So I think that that's why their focus is shifting so much to a different growth driver, right? A lot of times, if you feel like your business is changing underneath your feet, you might need to look for a new growth driver. And I think that that's really what Meta's focusing on here. The question will be, how long will it take really to get mass adoption? Because like you just said, I haven't tried the goggles. That just tells me something there, right? I want it to be where you ask anybody and they'll be like, yeah, I've tried that. It was really fun. That's what you should be hearing. And then you should be able to ask, even like, let's say younger, maybe kids, hey, are you using the Oculus goggles, right? And you should see them being like, yeah, I kicked my Xbox in the closet. I'm using the Oculus. When that happens, that's truly the moment where I want to be maybe looking at a company like Meta.
Well, isn't
Right
that also
now,
the constant struggle too, though, is trying to get in before something like that goes crazy, right? I mean, the cannabis
Yeah.
industry is a good example of that, right? Where it's so well known now, everybody's into it, but the time to get into it was before everybody was on board and when people hadn't really gotten comfortable with it yet. Then you had that massive explosion of growth in the sector. Now it's kind of leveled off, and even though everybody knows about it, it's here, and we're waiting on federal banking regulation, open banking, and everything else, there's really not a whole lot of explosive growth left, especially at this moment in time. So it's always the challenge too, right, of trying to identify something before it becomes a big trend to catch that ride up before it's well adopted by everybody.
Definitely. I always say this, and I think that it pertains to many different areas. Is that there's there's waves to the game, right? There's kind of the first wave where, the early adopters grab that, right? Then you get the majority to kind of jump in. That's where I feel like if we would kind of shift this to like maybe like a crypto outlook too, is very similar, right? I feel like that's what we're getting towards. Now for, let's say, for the metaverse, what comes into the next wave? Well, I'll be looking at companies that are essentially more of the kind of the development, the platform to create games for the metaverse, like, let's say, a Unity. Unity to me makes sense in the long run. Of course, it might not make sense with the valuation right now today, but overall, this is a platform where developers are going to go to create the games for the future. So in that case, I think this is the thing behind the thing. That's not a bad outlook to be looking at a company like that, right? It's versus a, let's say, something that is making a specific game and has to get it right. Like, let's say, a Roblox. For me, Roblox, yeah, it's one of the most loved games out there, but it's one game, right? It's not just a platform of that you can make games on. That's why I like more like a Unity that's going to be behind the scenes. The only question is, when will they get the appreciation they need? That's why timing is always the most important thing to an investment. It's not necessarily just the growth outlook.
Absolutely. Yeah, there's so much to making an investing decision, right? Which is the interesting part of making your investing journey is that, as you always talk about, the story behind the company, the fundamentals, the momentum, the technicals, the reason a company is doing what they're doing and what's coming next, being able to see into the future, as it were, right, and make your decisions. There's a lot goes into making a stock pick. There's a lot that goes into making an investment and building a portfolio too. So there's a lot to learn with all that. Mitch, what other headlines are we looking at in the market? I know we've got about, looks like 8 or 9 minutes before our guest comes on. So what else are you looking at today that's kind of shaping our decisions for trading?
Well, of course, today is a quad witch day. What does a quadruple witching refer to? It's the simultaneous expiration of stock index futures, stock index stock options, and of course, single stock future derivatives. This only happens 4 times a year. So we should expect some fireworks right here, like we're getting right now out the gates. I'm going to take a look at the SPY to see what's going on. You guys can see we're actually pushing up here towards 385.91s. We'll see if we get towards a 386 handle here and start pushing. But essentially, you're getting a lot of expirations to come into play. So with that being said, you get more volatility to play into a day like today. So you don't get any short of fireworks this week. We got the CPI, FOMC meeting, jobless claims yesterday. Now you're getting a quad witch. You always got to be on your feet. That's what we try to do at Benzinga, is keep you on your feet so that you at least know what's going on and you can make your own investment decisions from that.
Always.
Yeah.
Well, like you said, plenty going on too. And like I said, heading into the holidays here too, what do you think is the most important thing to keep an eye on before everybody goes out of the office, they're on vacation? Like, what should we be looking at before everybody's kind of off for the rest of the year?
Well, the recession concerns are starting to play in, right? And I think that's what's starting to take control of the investor, is no longer just focus on inflation. I think we can all agree that inflation's starting to go down. Now, it might not be as fast as everyone wants it to be, but that's not the focus. The focus there is that it is starting to go down. With that being said, now the focus goes towards the softish landing talk that you hear about that out there. And the focus now is, how bad will it be if we do go into recession, and how long will it last, right? Well, a lot of this is going to be an outlook into the earnings going into next year. Yesterday, we got retail sales that were disappointing. And why was that a negative? Was more, I think, of an outlook into the earnings for those retail stocks. We did see good Black Friday numbers, good Cyber Week numbers, but that could have just been because of inflation at a higher nominal rate, right? Because you're paying more for those items, but maybe we didn't buy as much volume wise. Maybe those items were just more expensive, and that's why we broke those records. But at the same time, when you see retail sales coming in weak, that shows me that the future earnings, are worth less than they were yesterday. So that is definitely affecting these companies. And I think that you could see that fourth quarter rally that we got start slowly going away into the beginning of the year as you get more concerns about recession. The things that can turn this around is jobs. If the jobs start getting really weak, then the Fed will have to think about actually pausing versus just slowing down the rate. But right now, job market doesn't seem like it's turning around. Even though we see all the headlines of layoffs, that's not what we're seeing in the numbers.
100%, Mitch. And a couple of headlines here that we actually did in our video news roundup this morning. Let me run these headlines by you and get your take on them really quick. Twitter suspends journalists who are covering Elon Musk. Suspended the profiles of several high-profile journalists who cover the social media platform and CEO Elon Musk. Suspended journalists. Is this a violation of free speech? Is this right? Is this wrong? Big headline here. What do you think?
I think this is going to be more of a matter of what is the Elon Twitter and what was the Twitter of the past, right? I think this is what a lot of people are trying to understand. And truly, is Elon creating free speech, or is he just creating the speech that he wants? I think that's something that we need to keep in mind, right? And one thing that was said from the beginning was that you weren't going to be limited speech, right? That's what the intention was from Elon. Seems like this is not what we're actually seeing come into practice. And this is affecting, most of all, not only Twitter, but Tesla. And I think that in the long run, we all need to keep in mind, if the issues are still going to be coming up with Twitter and Elon, how will that affect Tesla stock? Will Tesla stock keep coming down because Elon just seems to keep talking on Twitter and maybe making the wrong decisions in Twitter, affecting actually Tesla stock? So of course, with Twitter, doesn't make too much of a difference for us, because at the end of the day, it's not a public stock anymore. And so in that outlook, I won't be too stressed about it. Of course, there's still going to be a big mess that needs to kind of work itself out on Twitter, whether it be because, you know, you have your approval on the top right and you paid your $8 or $10, or situations like this where freedom of speech is maybe being held back on certain areas, when specifically Elon's intentions that he stated were to give free speech to all.
Good take, man. I like that. A last headline too, before we jump into our first company here getting on All Access. You just talked about jobs, right? Goldman Sachs considering cutting 4,000 jobs. Top managers being asked to identify potential cost reduction targets. What do you think about that, right? Is this a bellwether of our economy? Goldman Sachs is a big company. What do you think about that headline?
It just goes to show us that if the top companies are considering cost cuts, what does that show us? That doesn't necessarily, for me, scare me that unemployment is just going to skyrocket, because we're not seeing, like, let's say we're not firing 80% of our workforce. Now that would be a, like, you know, run the other way kind of headline. But what this shows me more is that they expect slowdown next year. And this is all due to what? The Fed effects finally coming into play, right? A lot of people talk about how the effects that the Fed does when they raise interest rates lag. A lot of times, even up to, some say, a 6-month lag. So we really got a lot of these big hike rates, 75 basis points, one after another, after another, after another. And we really haven't seen that effect play into the economy. What the companies laying off tells us is that there's going to be more slowing down next year than probably expected. And so what they want to do is make sure that they're not increasing costs in a slowed down economic time.
Outstanding. Mitch, great market insights, man. Coming in last minute, too. We appreciate you doing that. Like I said, obviously scheduling changes. What other way could we possibly have All Access end for the year in the last show than some scheduling changes, some last-minute edits, and some stuff coming up at the last minute? That's how we do things here. We adjust at the last minute.
Just like day traders and traders all around, we got to stay flexible, right? We always got to move with it. It's not about focusing on our emotions. It's about focusing on our intelligence and how we can keep upping our skill level. Just like that's why we present All Access, is to try to up our skill level. Maybe it's an understanding of different companies that we didn't know yesterday.
Exactly right. Mitch, my man, as always, we appreciate you. We're going to go ahead and roll into our first guest. Roll the video for All Access. We're going to bring on our first guest, and we're going to kick off the last show of Benzinga All Access 2022. Fantastic. And producer Aaron Thomas is giving me the thumbs up here. And before we bring on our first guest, Dr. Jordan Plews, I want to give a big thank you to producer Aaron Thomas, who has hosted and produced every single All Access show this entire year. If you're in the chat, give him some love, give him a thumbs up, give him some comments. He's done every single show this year, never missed a single one, and he's always been a rock star for the show. With that being said, we do want to bring on our first guest, Dr. Jordan R. Plews, co-founder, PhD, and CEO of Elevai. We want to talk to Elevai Labs. Let's bring him on now.
Hey.
Dr. Plews, it's great to have you with us. How are you?
Great to be here.
Great to have you here. We're actually really excited to discuss a lot of the things that you guys have going on right now. It's going to be a really interesting discussion. The usual way we start things off, there was an introduction to you and Elevai Labs. Can you kick things off by talking a little bit about what you guys do?
Yeah, sure. So we are a stem cell exosome topical company. We use human stem cells derived from the umbilical cord to generate growth factors that we basically put into skincare. And these growth factors are protected by something called exosomes. This is a sort of communication device between cells. And so we're using a very high-tech solution here for a very old industry, skincare.
All right, excellent. And let's talk a little bit more about you guys specifically with your products. And let's start with Infinity and Empower. What makes them better than what's on the shelf right now, and what exactly do these products do?
Yeah, so we have a two-part system. The first product, Empower, is meant to be used in office. This is something that if you're going to an office to get a sort of a procedure, this could be microneedling, this could be resurfacing your skin with a laser, microdermabrasion, anything like that, where you're causing a little bit of damage to the skin. Empower is used in office. And then our second product, Infinity, is a daily serum. So you take that home after you've been in the office, and it's got the stem cell exosomes, which is the core of our product. But then we've also really made this a super serum by adding other really key ingredients that we know work, things like ceramides, hyaluronic acid, a blend of vitamin C's, peptides, added glutathione, a lot of antioxidants in there. So this is something that's a very well thought out mixture that's meant to really support the skin and support skin health.
Fantastic. Okay, and let's dig into the science a little bit, right, to take it a step further from there. What are the stem cells that you mentioned specifically in relation to Elevai Labs? What are these stem cells? What are exomes? Do you have patents to protect your IP too? Let's start there.
Yeah, so we're pulling Wharton's jelly mesenchymal stem cells. So this is a portion of the umbilical cord. We're very picky about this. This is only from ethically sourced umbilical cords from full-term births, very well tested. We run our company a lot closer to a biotech than the typical cosmetic in our space. And this is something where these cells are only a small percentage of the umbilical cord, but we make a master cell bank from those that ends up being grown out in our lab. We have a lab in Northern California that really generates the exosomes in the product. And we more or less follow from the source, from the stem cell, all the way through to the bottling. So from source to skin, we manage the whole process. We think that's really important.
Parts. And what does it mean for them to be ethically sourced? It's a big part of what you guys do is ethically sourcing these and making sure that everything you're doing is better for people too, not just better for the bottom line and the profit margin, right? What does it mean to be ethically sourced?
Yeah, so this is something where we first of all want to stay away from anything embryonic. Remember a lot of controversy quite a while ago about different kinds of stem cells. So George Bush, for example, banned certain types of stem cell research in 2001 around the creation of embryonic stem cells. So that remains an area that's ethically dubious. You could say people have some issues with it. So we don't use anything that is before birth, nothing fetal, nothing embryonic. These are considered adult stem cells. This is a section of they're coming from parts of the body that are fully developed, and they're coming from consenting donors. This is very important that they go through quite a rigorous checklist to make sure that the donor is healthy. There's no viruses, no contamination. This is something that the cells are coming from somebody who's giving them to us. We're not paying them, a fee for this. So this is all part of the ethical consent, and that's just really where the process starts.
Outstanding. Okay, really impressive. And I want to talk a little bit about the team too at your company, with the people and the management team that you have. How important is the team and the ethos and the creed of everybody at the company to doing what you guys do? Is that an essential part of making up the company?
Oh yeah, yeah. I mean, the team is everything. I mean, always. So, my own background is in biochemical engineering. Went on to do a doctorate in stem cell research and molecular biology, and I paired up with a Harvard-trained plastic surgeon. Um, Also have some great guys with experience, in the finance side. They brought some companies onto the market. Also have been very fortunate to pull people from large companies that have been previously acquired in this space. Our CMO, Brenda Buchler, came from Alastin Skincare, which was recently purchased by Galderma. And my Chief Commercial Officer, Chris Kranice, comes from Zio. And if you've been watching our press releases, you might have seen we got Jim Headley as an advisor. He was the previous CEO of Zio Skincare. I believe he was at Obagi Medical before that, which you may know was acquired in a large SPAC deal recently.
It was, and that was actually the next question I was going to ask was about Jim there joining the team. We did see that press release, and we were really excited about it. What do you think the expertise that he brings from being the CEO of a company like that really adds to the company now in terms of what you guys are working on?
Yeah, I mean, Jim is great. It's like he's one of those guys that you can't possibly get enough information out of him. For example, I read the autobiography of Leonard Lauder, the son of Estee Lauder, and Jim is like, oh, he's like a personal friend of mine. He's somebody who's grown up and been through this whole industry for decades. His wisdom is so deep in this field that I can't possibly get enough information out of him. So we're really lucky to have him really as a friend of the company. He's seen it all. He took Obagi Medical, I believe, from about 2 million in revenue to over 100 million in revenue over a fairly short period of time. So invaluable for sure.
Outstanding. Well, obviously the team makes a big difference to what you guys are doing, and certainly it's important to have a leadership team that understands the mission that you guys are working on. So it's great to know that you guys have the management team there. Let's also talk a little bit about the expansion of your lab facilities. What does this do for you guys now? It was a big headline recently. What exactly are you guys expanding into? Give us some details there. And what does that do in terms of painting the path forward too?
Yeah, so we started the company over in the Bay Area, San Francisco Bay Area. And as you may know, it's an expensive place to start a startup. So we moved the company over inland a bit, a few hours east, and we're able to expand out. So now we have a lab that can do about 5x the production of the previous lab. And we got some nice offices. It's really given us a nice home base to grow. And we're already looking at designing additional products and having some parallel processes where now we can really do more R&D. So it's really about R&D, product manufacture, and churning out more product more quickly.
Outstanding. Okay, obviously exciting there. And then when it comes to, let's talk a little bit about the companies that you guys have in terms of, we talked about protecting your IP a little bit already, but not many companies that are using stem cells for cosmeceuticals, right? Which you talked a little bit about at the beginning here. Might conjure up images of, maybe Dan Bilzerian going to Panama with Mel Gibson for unapproved therapies, stuff like that. How do you guys specifically bring this stuff legit into the mainstream and kind of present it as something that's a legitimate product that consumers should be looking at and taking care of?
Yeah, so I think a lot of the things that you'll see out there that are a little bit dubious, a little bit maybe in a gray area or clearly over the line, are things that involve the injection of cells into or on a patient. Our products are cell-free. They are patented or patent pending. These are basically extracts or something there's a part of it that has been contributed by the stem cell, but we're not putting a living cell in or on anybody. Of course, no living cell is going to survive in a bottle. So we're all about shelf stable topicals. And we see this as a sort of an overlooked niche that has a lot of value. So, while I think there's still a lot of people out there that are excited to be injected with something and they feel that having the actual cells injected in them is the way that they want to go, that tends to really be a gray area or over the line area with the FDA, and not something that we're interested in. So we're trying to bring you really the best of stem cells in a topical formula, and are doing the best we can there to provide those stem cell benefits while also staying on the right side of things. And this is something that, frankly, has been in the industry in some form or fashion for a while. There have been some cell-derived topicals on the market now for probably over 20 years. This is really just the next generation technology. And this comes back to, again, I was sort of at the right place at the right time by doing stem cell research over in the UK while a lot of that work was banned here in the US. And it really allowed me to come back, do my postdoc in California, and leverage what we've figured out about stem cells to do something interesting in medical aesthetics.
Amazing. And this might actually be a really good time to bring up the deck too that we have loaded up here and talk about the first couple of slides with the exosomes. I know you had a couple of really illustrative pieces that might help us break this down too. Anything you want to point out here?
Yeah, sure. Let's skip ahead. Well, so this one, I'm not sure how much time do we have, Mitch?
We've still got about 10 minutes, so we're running pretty good on time.
Great.
We can dig in
Okay.
here.
Yeah. So go back one if you could. Yeah. So I think this is a real paradigm shift in my mind. Is that a lot of companies out there are starting with this sort of hero ingredient where they're taking something that's been cooked up in the lab, maybe a chemical, maybe a peptide, and then they're building a product around it, right? And then they're sort of advertising this is going to fix all of your problems. We didn't take that approach. We really said, what's going on in young skin? How is it maintaining its kind of youthfulness? And so we know that in the lower layers of the skin, such as the dermis, hypodermis, in that hypodermis, there's about 1% stem cells naturally. These are called MSCs, or mesenchymal stem cells, or mesenchymal signaling cells. There's some kind of debate about the types of how to define these cells, but essentially they're a big contributor towards keeping your skin healthy naturally. And we know that as we age, those stem cell populations are getting damaged, they're dying off, they're not working as well as they used to. So the idea is to really grow those cells in the lab environment, very controlled environment, to more or less trigger them in the lab. And it's, more or less sort of coercing these cells to think that damage has occurred. And in that lab environment, when we do that, they respond just as if actual damage has occurred, and they do what they do best. They try to release the factors that are necessary to catalyze healing and repair. And we're more or less coming in and stealing those factors, purifying those factors. And they're naturally encapsulated and protected by these exosomes. So if you go to the next slide, really what we're saying is sort of a top-down approach. I was meant to be a bit of an animation here, but rather than these sort of youthful factors bubbling up from the bottom of the skin, the lower layers of the skin, we're applying them to the top. And if you go ahead to the next, let's skip ahead a couple here. Yeah. So you can see here, this is meant to be a bit of an animation. It doesn't look like it's working for us, but the cells in general are talking to each other all the time, and the exosomes are really the language with which they talk to each other. The exosomes are protective, so that inside there's growth factors that are more or less pushing the cells that they come in contact with to be affected. And so you want to start with the right cell there. And we're, of course, starting with these very young, very pure stem cells, and then coaxing them to produce these exosomes, which we believe are really helping with the health of the skin. And so really, I think that the best thing to show here is maybe just skip ahead to the before and afters, because these animations aren't working for us. But yeah, this is our products right here. Maybe show that for just a minute. So as I mentioned earlier, and the in-office product here on the left, that's Empower. That's what you're using after you've had some in-office procedure. This is things like microneedling, radiofrequency microneedling, laser. There's some newer devices like the Tixel, things that are causing some amount of damage to the skin. And then this empowers a concentrated dose of these stem cell exosomes and powerful factors that you use in the office. And then they're meant to send you home with the Infinity product to continue the process. So it's a real two-part system here. And if we go to the next one, you can see this is usually what someone can look like after they've had radiofrequency microneedling. Again, the animation here is not working for some reason, but this really resolves the redness in a very short amount of time. So we see this within 1 to 2 hours. And then we also have some before and afters of some longer term results. If we skip ahead to the next one, you can see here, we really try to be quantitative. So we use quantitative imaging, really look beneath the skin. You can see here the redness on the left versus the right. This is after just 4 weeks of our daily topical. If you skip ahead another one here, you can see a little bit better, clearer picture. So this is 8 weeks. And you can see, again, looking at the nose and cheeks, a lot of redness there that gets resolved naturally through the use of our topical. And again, the next one, see another angle here. And so, for folks that are dealing with redness, maybe some kind of signs of inflammation in their skin, these stem cells are really built to modulate inflammation. And so we find that the factors they produce really help to calm the skin and support skin health. If we go to the next one. And again, this is a bit closer view here, so you can really see. Again, this animation unfortunately isn't working for us, but you can really see on our website. You can go to elevailabs.com or elevaiskincare.com, and some of these animations are there. You can see how quickly this clears up, just 8 weeks. If we go to the next one, I believe we have some pigmentation as well. So you can see on the left here is kind of a before picture. This is a patient that came into one of our customers complaining of a lot of hyperpigmentation issues. And we have this nice filter, if you see on the right, and you can see how this sort of darkness beneath the skin has really resolved in about 3 to 4 months. And so, I tell people what's important here is the skin, it doesn't change overnight. I think there's no magic bullet here, but at the same time, this is really powerful stuff. This is something that works quickly. This is something that works safely. And rather than rely on some kind of a chemical or a single ingredient, what we're doing is kind of grabbing a mixture of factors that are produced by these stem cells naturally. We're combining them with other things that we know work, and really resolving these tough skin issues in some form or fashion, really improving the quality of the skin over time. And that's really the goal for us. If we can go to the next one. Yeah, and so this is just kind of a peek into what happens behind the scenes. And this might look a bit foreign for most, but we have a state-of-the-art lab, and we're really following this process, what we say, from source to skin. We're all the way from the derivation of these stem cells through to their processing in our laboratories, through to the formulation side. And this is really a testament to my background in biochemical engineering and stem cell research coming together with the expertise of my co-founders to put together something that I think for the physician dispensed or medical dispense community is really different and special. So, whereas there's a million brands out there selling skincare, in the physician dispense market, we're going into dermatology offices, plastic surgeons, medical spas. This is really a niche market that I think is a lot larger than people realize. And it's something where there's really only a handful of companies that are addressing it well. There's some really entrenched companies that have been there forever, but there's not a lot of options. And when you come out with new technology like this, it requires a high level of education, and that's why we partner with our medical partners that are selling this in the kind of medical aesthetics field, right alongside things like Botox, hydrofacial, etc.
It's amazing.
Does that make sense?
Yeah, no, I love that explanation too. And I know there's actually a lot more on this deck that I wanted to dig into. Unfortunately, we don't have that much more time. So instead, I'm
Sure.
going to ask you a final question here too. Moving ahead for Elevai, right? As you guys go into 2023, give us a quick 30-second look at the biggest plans you guys have and what you expect out of the company over the next 12 months.
Yeah, so we see further growth in our team. You know, we've got some great team members already, but we want to really grow our team. And I think most exciting is we have some new products coming. So I won't say exactly what they are yet, but we've been working on a few very interesting products that we think are also going to move the needle in other ways. Again, addressing this space in what we call the physician dispense or medical dispense field. This is dermatology offices, plastic surgeons, and medical spas to really enhance what these folks are doing already and give you something powerful that you can use in office and at home.
Amazing. Honestly, Jordan, it's been a serious pleasure having you here. There was actually a lot more that, like I said, I was hoping to get to, but I know we're working with some members of your team, Tyler, and some other folks that have been doing a fantastic job. I think we'll have a chance to get some other content out shortly on Benzinga, talking more about what you guys are doing, because it really is an incredible story. Jordan Plews, thank you so much for joining us this morning.
Thank you. Great to be here.
Pleasure to have you here. Dr. Jordan Plews, the PhD co-founder, CEO of Elevai Labs. Wonderful first interview to kick things off. A little bit of a delay at the beginning, but we are fully rolling into the rest of the show. We're going to keep things moving with our next guest, and we're going to talk once again with Zarko Meseldzija, Director and CTO of RecycLiCo Battery Materials.
Hey, how's it going?
Zarko, great to have you here as always. How are you?
Excellent. How are you doing?
It's a pleasure to have you here. Doing well. We had some scheduling snafus to start the show, but as always, even when things get hectic, we still have some wonderful guests and some things lined up. So always a pleasure to talk with you. Quick introduction. We've had you on All Access several times. For anybody that hasn't joined us before and heard about you guys, what is RecycLiCo?
Yeah, RecycLiCo is a lithium-ion battery recycling and upcycling company. So we have developed a patented process for recovering up to 100% of the lithium, nickel, manganese, and cobalt in end-of-life lithium-ion batteries, and upcycling those into those high-value battery-ready materials that can be reintegrated back into new battery manufacturing. So essentially creating the fully closed loop. And I know I've been on here before, but yeah, every time we talk, the industry just keeps heating up, and electric vehicles, batteries, and recycling are just top of the news.
No, absolutely. And it's interesting you say that, because I was actually doing some news reporting yesterday with one of our reporters for our video news roundup that we do every morning. And one of the big headlines was about lithium-ion batteries and about how there's more and more talk of this, and it seems to be becoming a predominant conversation in the market. So let's kind of dig into that a little bit. What is exactly lithium-ion recycling, and why is it becoming so important now? What is the shift that's happening that's causing this to become such a huge topic of conversation?
Yeah, well, you think, I mean, we've always had electrified devices. We had our cell phones, we had our laptops, but now you're bringing electric vehicles into the equation, and the amount of batteries you're going to need has just grown exponentially. I mean, you're seeing countries outlawing the sale of internal combustion engines. Even here in Vancouver, Canada, we're just seeing electric vehicles everywhere. But the one core piece of that is the battery, right? And the battery, there's, where does that come from? You're going to need to mine for those materials. I mean, there's no getting away from the mining as well. Recycling can complement this, but you're going to need to mine for lithium. You're going to need to mine for nickel, cobalt, manganese. There's copper in there. There's aluminum. There's all of these valuable materials. And now mines just don't come up fast enough. But now you have all this surge of electric vehicles. You have this tsunami of end-of-life battery materials coming, and what are you going to do with that? Are you going to landfill it? Are you there's inefficient methods of just pretty much throwing all of that material into a smelter and then really losing the potential to recover all of those materials and reuse it. So recycling has just become this huge topic because of this surge of lithium-ion batteries and the value it holds, right? It's this is not just we see like plastic waste, but when you look at like a battery, I mean, there's the intrinsic value, and there's just like having a mine with all of these metals in one place, and it's just also concentrated.
Fantastic. Okay, really good breakdown there to kind of set the scene for us. Now, tell us specifically about the RecycLiCo process, and more specifically, what makes your process and your tech different than other people in your space, than competitors, than anyone else? Give us a high-level breakdown of how your process works.
Yeah, I think like there's, recycling really gets clumped up all the time into just one word. And I think a lot of times when somebody thinks of their electric vehicle or cell phone and how does that material get recycled, maybe they put that into a bin or, with an electric vehicle that gets collected. But so there's obviously a method of needing to first physically separate out these materials. There's a lot of different components that are put together. And then this is a very standard mechanical kind of process where you're shredding these materials down. But what you're just going to create is this clump of all of these valuable materials in like one, what we call in the industry, black mass. It has your lithium, it has your nickel, it has your manganese and your cobalt. And it just like a very high concentrated, think of it like a mine concentrate, like if you were to go to a mine. But that's not really where it stops, and that's not really what recycling is what it's all about. It's not just about breaking down these materials. What our process really comes in is actually being able to refine that material into that battery quality, so the very high spec material that's needed for battery use. And then that's really what separates our process, is because we're able to get to that final product in a minimal amount of steps. So we really, lump a lot of these traditional steps in the supply chain into one process that's environmentally friendly. We've shown huge reductions in our CO2 emissions compared to mining and other recycling processes. And then just the amount of processing steps required, which also kind of benefit the processing costs. I said the environment as well. But yeah, it's about really getting to that high value product that can actually be used. So that's really where we come in with the word upcycling. Recycling is really just this breaking down the material. Upcycling is taking it to that next level, so it can actually be used as a circular material.
Amazing. Great breakdown. It made a lot of sense too. Really, really good high level look. And speaking more to that too, how does the management team at RecycLiCo help affect this process, right? Tell us a little bit about the members, the people, the management team and their experience specifically. How does that help you guys do what you do?
Well, the management team, we've really been at this for quite some time, since really pivoting into the recycling in 2016. We have a dedicated team of people working on this, just really, really smart group of individuals. I myself come from a mining history as well, and a lot of our team as well. And really, the way we look at this is it's mining versus urban mining, and a lot of the steps that came into developing our process actually came from a history of developing a patent for a mining process, and whether that's in mined material or battery material. A lot of these steps in chemistry is still very similar, and I think that's where all of our strengths come from, and just being very practical about the approach and how we scale this process, right? So we're really at this stage where, this year we went through a lot of building and demonstration plant testing and all these trial tests, and really getting to the scale up ready stage for commercial, and that's really thanks to that management team and that experience, because from day one, we had this practical approach in how this thing is going to scale. And I think that's the core thing when you're developing new and innovative technology.
100%. And speaking to scaling that, right, and growing as a company, in your words, how do you balance science and business? How do you balance the green approach and trying to do things ethically, and also the business side of in what's still a burgeoning industry for sure? How do you balance the science and the business aspect of making money together and make them both work for good?
Well, yeah, that's a good question, right? Because I think a business model is really key and something we thought about very seriously. How should I put this? When we look at our traditional waste right now in our food waste or plastic waste, whatever it may be, right? We generally think in this concept of kind of disposing it in the bin, getting rid of it, and a third party takes care of it, right? And that kind of goes down its supply chain, and we don't really know what happens with that material. But when we think of battery waste, we really ask the question, like, is it really waste, right? And it's more of like a resource, given how much material is in there. And then we ask, well, who are the companies making this waste, right? It's going to be the electric vehicle companies who are going to have this just growing supply of end-of-life batteries, and it's going to be the battery manufacturers who are also going to have all this off-spec material, and they're going to have to deal with. And so it's going to be this mindset shift in, is it really a waste or is it a resource? And that really made us focus on our business model, which is more to integrate our technology with these companies and not enable them to take their waste and actually recover it back into their supply chain. So it's not to be that standalone recycling facility or that third party that takes the waste off of their hands and then we process it and then we send it off to somebody else. But it's actually more of an integrated approach of getting that technology there on site and working more collectively, so that material never really has to move very far, right? It's bringing the technology there, recycling it, making battery ready material, introducing it back into the manufacturing process. And really we envision all of that happening in kind of like one battery park area.
Fantastic. Okay, no, really good insights there. And let's talk a little bit about exciting news, right, in terms of what you guys are doing with this growth and the scaling. The demonstration plant project that you guys have, you recently released some really exciting numbers that actually exceeded your stated expectations. Tell us a little bit more details there.
Yeah, the demonstration plant. So this year has been a really foundational year for us, because it was the next scale up of our process, which was that demonstration plant. And what we had designed for was 500 kilograms per day input of this lithium-ion battery waste. And then we've gone through, phased approach and testing. And one of the core steps in this leaching stage, and that's really one of the limiting factors, because that's really where the reaction occurs. And there's no really way of speeding that up or slowing that down. You have to wait for that reaction to occur. And that was operating a lot better than even we designed for, achieving, I believe, 163% of that design capacity. So getting just over 800 kilograms per day, which I think just opens up our world in terms of commercial design, getting ready for those, the engineering study, the commercial design kind of opens up those opportunities in how big we can build this plant. And just gets our engineering brains working. But yeah, there's been quite a bit of updates as well. I mean, we just had a 2022 highlights, and even as we were writing and reading through that, it was quite impressive to see how much we've achieved this year.
Absolutely. And speaking of achievements too, you've been granted patents in the US and other countries earlier this year, but in recent months you were granted a patent in China, actually. What does this mean for RecycLiCo? What new doors and opportunities is this going to open up, and how are you going to use this?
Yeah, the patents is really key to us, because, as I said, like, we're more of this technology play that's looking to integrate the technology, and that kind of fits in with our business model. So with the China patent, I mean, actually we just recently got the Australia one as well, and the Canadian one. We have South Korea, we have Japan, India, US, and so, but China as well is an interesting one, because the lithium-ion battery industry and all of this technology is really mature in China, and it just, for us, to have a patent granted in China, you have to do the patent investigator agent has to look through and see if there's any prior art, if there's any conflicting technologies. So for us to be granted these things is a good sign of the novelty of our process. Actually, even with the US patents we've been granted, those are some of the fastest patents I've seen issued. One of our first ones was actually from the date of filing, was issued 13 months later, and our second patent was issued, I believe, 81 days after the filing, which last time we checked was the fastest issued patent in the inorganic chemistry category. So this is all very core to our business model and the novelty of our technology, and building that moat around this is what you need to take your battery waste to the next level.
Excellent. Okay, another really good insight there. Now, let's talk a little bit about historical production of global batteries and how this is going to work playing forward too, right? Global recycling capacity tracked with global battery production. How have those two things kind of linked? Will there be any supply or demand issues in the years to come between these two poles of the supply chain? And I know we talked about this a little bit the last time you were on All Access, the supply chain issues that we've seen with COVID and everything else. But how do you see this playing forward? Do you see any issues with your business specifically? And what do you think this industry is going to look like in the next few years?
Yeah, you're talking about like the supply and demand gap, and then yeah, I mean that is only getting larger when it comes to the demand for electric vehicles, and I think there's this perception of we need every country is looking to adopt more electric vehicles, companies are looking to build more electric vehicles, and then I think the realization of mines don't come up fast enough. You need to build the refining capacity for all of these, so that gap is definitely getting larger. And it's a real crunch for some of these companies to get some of this raw material from mines, because that's locked up maybe by other companies, or that supply has been locked up. So recycling just plays a key role there, because now the criticality of these materials, plus this legislation and what you need to use recycled materials, especially with like the Inflation Reduction Act, you need a domestic source of materials. That all plays a very key role in closing that gap between how much supply there is, and I think recycling is going to play a bigger and bigger impact on that, and I think long term make up a majority of the new material that's reintroduced back into the supply chain.
100%. And let's talk about the U.S. specifically with battery production and recycling, right? Is the U.S., I think we talked a little bit about the last bill that we had signed into play, that Biden actually signed a few months ago, that pumped a ton of money into the green and recycling industry and everything else. But is the U.S. doing anything to encourage battery recycling actively as of right now? Do you see this changing anytime soon? Are they going to help more or less?
Yeah, in the U.S., right, there's an Inflation Reduction Act, which in a way as well promotes battery recycling, because there's this now need for domestic supply of materials, and whether it's coming from mined in these free trade agreement countries, or it's recycled. But now you're seeing companies looking at all corners of North America and other countries, just see where can they get these materials, more of an incentive to recycle their batteries within our borders, instead of just shipping that waste away somewhere else, because you're going to need to reintroduce that material back. So that definitely does play a key role. And then I was just in Europe as well, and just seeing that mentality there. There's different incentives where in the US, it's kind of the Inflation Reduction Act. In Europe, it's this focus on, well, you need a certain percentage of recycled material in new cells. You just need to recycle a certain percentage of the material as well. You need to reach a certain efficiency. So everybody's being mandated, and then just that bar keeps going higher, and that's going to incentivize more efficient technologies like ours to be implemented.
Absolutely. Okay. Makes a lot of sense. And now for more of like a hot take question, right? In your industry as a whole, will there be a time when combustion engines become illegal to operate? If so, when will that happen? How is it going to affect your industry, the industry we have as a whole right now? What's your perspective there?
That's I don't know about illegal, but I think we're going to look at them like we see horses now on the streets. Sometimes you see like a little carriage pulling some people around in a park. Or like, you have that collector car that's tucked away in the garage and somebody's working on it. But I'm very optimistic for electric vehicles, and I mean, we're gonna look back and just before you know it, right? It's all gonna be electric. It's kind of already looking that way here in Vancouver.
100%. Now, do you own an electric vehicle yourself? Do you drive one around every day?
I do. I have to walk the walk. So.
You got to believe in what you're doing. I love
that.
Exactly.
Yeah. So I know how impactful they can be.
100%. Well, Zarko, it's clear that you believe how impactful these things are, your entire company, and obviously what you guys are already doing in your industry, making a huge difference. It's always a pleasure to have you and RecycLiCo on. Joining us actually for our last All Access show of the year. We wouldn't want to end it any other way. Thank you so much for being with us.
Thank you for having me.
Always a pleasure. Zarko Meseldzija, Director and CEO of RecycLiCo. Great to have them on to end the year. We've had him several times. Another great conversation, as always. Excited to talk with them again soon. We're going to move on to our next guest and bring on Shane Schaffer, Chairman and CEO of Cingulate, and get started. Shane, thank you for joining us.
Hey, Michael, how you doing?
Wonderful. Shane, it's great to have you back. How are you today?
Doing well, doing well. Good to see you, my friend.
Always a pleasure. Shane, kick things off for us. For anybody that didn't catch your last interview with us the last time we had you on, tell us a little bit about Cingulate and what you guys do.
Yeah, sure. So what Cingulate does is we are a pharmaceutical, biopharmaceutical company. We have developed a drug delivery platform called Precision Timed Release. And what that does is it allows us to take 2, 3, 4, up to 5 of the same or different drugs and put it into a tablet about the size of your pinky nail. We then can take that medication and precisely time, ratio, deliver, and style exactly when, how, and in what ratio that medication is going to be delivered to the body. We have 2 assets currently in development in the attention deficit hyperactivity disorder space. We also have an anxiety asset as well. And then furthermore, we're actually in the process of out-licensing our technology to other pharmaceutical companies, which is something that we've been looking to do for years. And we've gotten to the point now where we've built this commercial stage platform, which really is pretty exciting for a lot of people in the pharmaceutical space. We're entering phase 3 trials in a couple of weeks. So we're going to get our first phase 3 trials started here in December. And that's going to be a study that takes a look at the 2 most critical factors in ADHD. And that is, number 1, the overall entire active day efficacy of our product, which no single stimulant to date has ever provided in this $18 billion category. And in doing so, too, we're eliminating the booster doses of the recovery medications that over 60% of patients have to take every single day. These booster doses are abused. They're diverted to other people. They're troublesome. They cause side effects due to the timing and style of when these medications are released. So we're really excited to get these medications to patients. Physicians have been clamoring and begging for a medication, one simple drug that takes care of an ADHD patient's overall needs for an entire active day for their ADHD symptoms. So that's us in a nutshell.
Outstanding. Great start. Exciting start. I have a lot to dig into here. First, I remember this from the last presentation too. You've always got the little dog walking around in the background. Tell us a little bit about the dog. Always in the office with you?
So Roscoe's here every day, and you may, folks, you may see him go in and out of his little dog door throughout the presentation. He's heard this presentation a few times, so he gets a little bored and likes to wander around and go hunt down treats in the office.
That's
we
awesome.
joke he's the vice chairman of the company.
Well, we love that. We get to have a dog in the office every once in a while. There's nothing better than that, but we had to ask. So let's dig into, we love that. So let's dig into things a little bit more. PTR technology. What exactly is it? Why is it so important? Give us some details here.
So what's so really critical about it? It's the first drug delivery platform of its kind ever in the world. In one small tablet, that ability to combine different medications, the same medication, depending on what the overall therapeutic goal is, to be able to deliver that medication in the right amount, at the right time, in the right style. We have the ability to, within a 5-minute window, to not predict, but to actually deliver exactly what medication a patient needs when they need it. So for our ADHD products, it's very different than our anxiety medication. In terms of the timing, the release style, et cetera. When we look at other drugs such as in bipolar disorder or neuropathic pain or in insomnia or xerostomia, that's going to be a totally different delivery philosophy. And this platform is so easy to manipulate in terms of how we design the product. That's something that the pharmaceutical world has never seen before in this product. And then also to deliver it in such a small tablet. These are really innovative things. And then finally, from a payer perspective, or even for the patient and the cost and the out-of-pocket cost they have, by taking multiple medications or multiple fixed dose combinations and all those copays or all those cash pays, we simplify not only their treatment regimen, but we lower the amount of cost that the patient and sometimes the payer has as well. So we're really looking to provide a solution across the spectrum of payer, patient, and payer.
Terrific. Okay, and why focus on ADHD and anxiety, right? Are you looking at other applications here? Is there an expansion of your mission and what you guys are doing at Cingulate?
Yeah, absolutely. So, I mean, we started the company. Dr. Matt Brahms, Dr. Raul Silva were two of the top key opinion leaders and experts in the ADHD space. When I was I've been at Pfizer, Sanofi, and then Novartis. When I was at Novartis, I was part of the team that really relaunched the Ritalin franchise. So we brought Ritalin LA, Focalin, and Focalin XR to the marketplace. And frankly, we were sitting at a July 4th barbecue back in 2012 at Dr. Silva's house, and everyone was lamenting, all the docs were, the fact that these ADHD products that are on the market today have all these unmet needs, from fast onset to the most important, which is entire active day duration, some of the side effects and tolerability issues, the abuse, the diversion, the booster doses, the crash, the rebound, all these things that come with the products that are currently available today exist. And this is something that's been plaguing this market for over 70 years. So we said, hey, why don't we solve this problem? And we thought it'd be easy, and it wasn't. Instead of us taking a delivery technology off the shelf and licensing it from a company, what we had to do was create a delivery technology from the ground up. And that's where PTR was invented, and given us that ability to really fine tune exactly what a patient is receiving from their medication. As we've gone through this process, we've realized that not only is this an ADHD medication, and that's how we named how I named the company, quite frankly, the prefrontal cortex, you have the cingulate gyrus, the specific area is called the anterior cingulate, and that's where executive function is controlled. That's where ADHD is present with the dopamine receptors, the DAT receptors. So that's how that company was named. That's what was our initial passion. As we talked to more physicians in our early stages of the company, they said, hey, what about an anxiety med? How about insomnia, depression, bipolar, xerostomia, dry mouth, migraine, Alzheimer's, pain, and get out of the opioids? Those are the things that we've now realized that we can use with this platform. And as we continue to develop our products, get them approved, become revenue positive, we really plan to have at least one new asset in our pipeline every year. So tremendous growth opportunity, and great time to take a second look at Cingulate if you haven't.
Absolutely, yeah. And we do have the deck pulled up too, which I want to get into, but we also have a question from our audience that I want to bring up first to make sure we get to that. When will we have an update on the commercialization partnership? Results from the food and drug study? Any updates you can pass on for the audience there?
So we concluded our fast fed study, which is basically, it's a phase 1 study where you look at the effect of food on the product. We'll be seeing those results in the next couple of weeks. And then, of course, we're starting that phase 3 trial this month as well. So those are the key clinical studies for CTX-1301. For CTX-2103, which is our anxiety asset, buspirone, here's a product that is the #1 medication for generalized anxiety disorder. It's a chronic medication. It's not one of those PRN or use as needed medications. So it's something that patients take for years and years, if not decades, to help control their generalized anxiety. We concluded that trial, and the data we had 2 trials planned, and the data was so good from the first, we're done. And we're moving it back to the US, and we're going to get an IND filed for that next year after we meet with the FDA, the regulatory folks over there. So we come to agreement on a clinical and regulatory development pathway. So those things combined are really what's really been at the crux of what we've been doing on the clinical side. On a commercial side, and if there's any lawyers on the phone, I apologize, but we are really excited to talk about our joint commercialization agreement, but those I's and T's are still being dotted and crossed. But what this is going to provide Cingulate is the ability to bolt on to an organization that has every single aspect of pre-commercialization and commercialization, from sales force, medical liaisons, drug distribution, third-party logistics, market access. And they have the best market access team. We basically bolt onto this pharmaceutical company that doesn't have drugs and utilize everything that they have from a commercial perspective to do several things. #1, lower our risk, lower the cost of commercialization, and you're doing it with a world-class organization that has a lot of great data and track records in their ability to commercialize products. So those are really some of the 2 of the most exciting things that we've been doing since we spoke last.
Outstanding. Okay, and actually a question from the same user too before we move on to the deck too. Let's get right into the meat of it. You've talked a lot about Cingulate, right? Taking a second look at the stock being undervalued, the company being undervalued. Why haven't we seen a buyback yet? Will we see a buyback? What's your take on the undervaluation part of this and why we're seeing what we're seeing?
Yeah, I mean, I like the book you have back there, Musk. I mean, that people are asking the same question I think about a lot of the companies he's running and this market in general. It's a bad market out there. It's tough. We went through, we hit our 1 year anniversary eight days ago from our IPO. So we're public. That's good. We have access to the markets. We've passed through our any restrictions we had in terms of offering new equity. It's not ever our goal to go out and just sell equity, but we do need more capital to do that. And I think a lot of the things the marketplace is looking at today is, what is your cash runway? The good news is we're very confident with some of the banks that we're working with that we know we're going to be able to have the cash we need to get this first asset to approval. And we're excited about getting that done. And we'll have some a mixture of different types of financial vehicles that we can utilize that minimize dilution but still give us the capital we need to get this product approved. In terms of the valuation of the market cap, here's an $18 billion category. It's actually 20 in some reports, the ADHD category. And we have what, a $10, $12, $15 million market cap? And we've created, not are creating, but created the best, most differentiated medications the ADHD market has ever seen. You have your first generation stimulants, Ritalin, Adderall, those are the short actings. In the 90s and early 2000s, they were replaced by the second generation of medications, the Vyvanses, Concertas, Focalin XRs, and Adderall XRs of the world. We are the third generation. So does a patient want a flip phone or an iPhone? Or a Google Galaxy 75, whatever those are. I'm an Apple guy. And that's what we're offering them. This is the iPhone. This is the Galaxy. And this is what's going to completely change and revolutionize treatment. Physicians cannot stand, they hate writing 2 scripts, but they do it for nearly all their patients because a patient needs a booster, either in the morning. I mean, get a load of this. I mean, 80% of parents are waking their kids up an hour before they need to wake up, giving them their Vyvanse, giving them their Concerta, because the drug doesn't kick in for 2 hours. I mean, one of the first statements one of the top KOLs said to us is, parents are going to love you. And I go, yeah, you're right. But more importantly, the outcomes that patients are getting, the benefits they're going to receive is what's really most important to us. We have 9 critical and clear points of differentiation in what people call a generic or crowded market. It's another little misnomer in ADHD. These are controlled substances. Generics are not tremendously less expensive than branded products. Anywhere from 90% of that cost of the brand in some cases. And those are the extended release products, and that's what we've developed as well. But we're differentiating ourselves across the board in terms of benefits to the patients, cost to the patients, payers, and ease of use.
Amazing. Very, very well put. Great explanation. Really appreciate that. Let's go ahead and dig into the deck. Now that we've got all of that kind of platform underneath us, let's bring up the deck here. Anything specific you want to pull up and dig into on here?
I think actually I can cheat and look at myself. So if you want to look at like slides 4, 5, and 6, I think those are probably the really good place to start here. So this is great. When you're thinking Cingulate, not only is there a major disconnect, and in our opinion, do we feel like we are tremendously undervalued. But take a look at the milestones and some of the catalysts we're going to be achieving, not only this month, but throughout next year. With our ADHD programs, all the phase 3 trials are in initiation stages. The sites are identified. They're under contract. We're ready to roll in terms of getting those things done. In addition to that, we're going to bring 1302, which is the amphetamine side of that stimulant category. Just a quick 10-second brief on the stimulant or on ADHD. 93% of the scripts are stimulants. So the non-stimulants, and a few have launched in recent years, they're not bad. They're adjunctive therapy, and they're good. Most of them are failed antidepressants, and they have some effect in ADHD. But at the cornerstone of ADHD treatment is stimulants, and they split between amphetamines and methylphenidates. That's why we have one of each asset. So our ADHD programs are moving along nicely. In anxiety, we had a very successful formulation study that was conducted earlier this year. We're going to meet with the FDA this year to talk about our clinical plan. We feel strongly that this should be it will be a 505(b)(2), but we believe this should be a pharmacokinetic comparison because we're not looking to change the label for buspirone at all. So we want to get that IND developed, get the product developed, put it on stability, and move that forward. From a PTR platform perspective, we've upgraded our manufacturing capabilities. We moved to a company called Societal, which is down in Georgia, and these folks are, they've developed, dozens and dozens of drugs. We're making it bigger, more commercial ready. We're out licensing the platform in several different therapeutic categories, and that's our strategy. And then, of course, we're going to look to out license in the outside of the United States as well, all three of our assets. So a lot of nice milestones, a lot of catalysts coming in 23. And we really hope to see this have a major effect in terms of the overall market cap and stock price.
Amazing. Okay, and another question from our audience too. How are insurance companies going to work with these new releases?
Yeah, so this is payer is the most critical element really of commercial success of these products. If you take a look at the last 12 drugs that have been developed and launched in ADHD, and this is not calling a kid's child ugly, they're all beautiful, but the fact is all 12 of these drugs combined they barely make 1% of the market. Why? They don't overcome a single, not one, unmet medical need, unless swallowing is an issue. And that is an issue for less than 1% of the population. So if you need a liquid or an oral disintegrating tab or something like that, there's your solutions. But market access on the payer side isn't reimbursing for them. Why? There's no demand. And quite frankly, physicians don't like these products because they're very expensive, they're not covered, and they don't have enough dosage strengths. So there's a lot of complexities in this marketplace. Doctors want to be able to titrate. Psychiatrists are the most productive sort of a segment of physicians in this category. They start, they initiate, and they change the medications. A lot of times your family practice or pediatrician will fine tune things or just be the refill doc. At the end of the day, you need to be able to give that patient the right dose. And if you only have 3 dosage strengths, a doctor immediately disregards this medication. Like, I'm out, because I'm not prior authing this thing every year. I'm not going to try to titrate my patient up, realizing that it's too low at your first dose and then your second dose is too high. I have nowhere to go in the middle. Cingulate has 8 dosage strengths for both of its products, which is going to allow us the ability to titrate and optimize therapy for 95+% of patients out there. This has never been done in ADHD before. We truly set out to say, look, how do we solve this problem in ADHD? Let's tackle that and move into different therapeutic areas as well.
Excellent. Okay. Great understanding there. Now, you also recently presented the results of a human formulation study that lead anxiety candidate CTX-2103. I think you've already talked about this a little bit, but what's next? Can you give us a little bit more of a picture down the road as you continue to work after this human formulation trial?
For that product, yeah. So you can shoot over slide 18 if you want, please. And this is one of the most simple selling things I've ever had to do in my life. That's part of the Lipitor, Viagra, Avaparavalide, Plavix, launched a lot of different products at various pharma companies. Which one do you want? The product on the left that you have to take 3 times a day and hopefully take it at the right time. Oh, and by the way, you have anxiety already. This is going to cause anxiety, the product on the left. You have to take it 3 times a day for it to be effective and reach its effectiveness. Or do you want to wake up in the morning and take 1 tablet that Cingulate has? And there's your pharmacokinetics. We nail it in terms of providing patients what they need. Better outcomes, better compliance, better overall treatment. What our next step is we're going to take this data. We'll go speak to the FDA, let them understand exactly what the product is intended to do, which they should very easily. And then we'll agree on a clinical and regulatory development pathway. From there, our goal is to get into the manufacturing suites that we have and put those products into the manufacturing, get them on stability, and file what's called an investigational new drug application, and then move into the clinic in 2024. This could be a product that is tremendously accelerated in terms of its overall development and approval.
It's like
you're on mute,
question.
Michael.
Oh, yeah. We go back off here. Sorry, like I said, I'm still dealing with some congestion after our events last week. I'm trying to mute and unmute, just get a quick cough in between.
No, you're fine,
question.
Man. Well, 2 weeks ago I was supposed to be with you, but I got the flu as well. So
yeah. Oh, it's going around this time of year. I'm definitely feeling it.
Yeah.
That being said, though, so as we're moving forward here, right? You just inked a manufacturing deal with Societal CDMO, as long as I have that name correct. Walk us through some of the details of that deal. Why was this deal made? Why did you choose them? And what's so significant about it? What do we see from this going forward?
Yeah, simply put, we went from a manufacturing facility that did some good work for us that has 30 operators. Now we're dealing with 200 operators and engineers. So it's a much larger organization. They have the ability not only for our single product at 1301, but eventually we can have 3, 4, 5, 6 products at this place. And they have the staff, the skill, and the expertise. So just consider it a major, major upgrade. Because throughout COVID, it was challenging for a lot of companies, and it was challenging for us, but also some of our partners that we work with. With Societal, they have such a good team, a large team, and a very skilled team that makes it so much more effective for us, so that we don't have to worry about some of the issues regarding manpower and operational resources. So great group of folks. We're excited. They're building out our suites right now. We plan to be in manufacturing in the next probably 45 days for our final 2 dosage strengths for our final phase 3 study, which we want to get done in June.
Amazing. Shane, it's funny. I was just thinking to myself, every time we have one of these conversations here on All Access, it moves a lot faster than I'm expecting, because everything you walk through is so interesting. We're kind of like staying in touch with every single detail, and it moves a lot faster than we're thinking. So I know we're coming up close on time. A final really quick question for you. High level, Q1 of 2023, specific things that retail investors should have their eye on. What's big that's coming next from Cingulate?
The onset duration trial with CTX 1301. This is what payers, physicians, and patients want to know. When does your drug start working, and how long does it last? And of course, with that, they'll look at the tolerability and side effects. Now, we have 3 studies already, which we've done in this with this product. If this study does what we've seen in the past, and these are stimulants, so there's a very, very high correlation, 100%, to pharmacokinetics and pharmacodynamics. We know this category so well across the industry. We really do expect to see the fastest onset and the most appropriate entire active day. And I make that clear distinction, active day. We want this medication to be something that provides superior efficacy for a solid 12 hours. So 7 a.m. to 7 p.m., from breakfast to dinner, from home to homework, from revelry to taps. We want to get you through your day, and that's exactly what this product is designed to do. Study starts in January. It's being run by someone who joined me on a prior Benzinga call, Dr. Ann Childress, and she is the preeminent researcher in ADHD. And then we'll have 22 other great investigators and researchers help us out with our fixed dose trial in the second half of next year. In addition to that, we'll hopefully have some great news around some patents, which we have filed, and look forward to hearing from the U.S. Patent and Trademark Office. We have the potential, I have to say the word potential, if any of my attorneys are on the line watching, the joint commercialization agreement. And that right there could be the biggest news we have, because these drugs, 100% of ADHD stimulants have been approved over the last 50 years, 100%. There's not a category like this. Because they're stimulants. They're all the same molecules for the most part, and we know how good and how well they work. They're the safest and most effective meds. What we're doing is optimizing it. So we have a very strong probability of getting approved. Again, 100% over the last 50 years. We don't plan to be the first, especially with the data we've already developed. But with that, the joint commercialization agreement is the biggest question that the intelligent retail investors ask, but also the big boys, the Bains and the Perceptives and the companies out there. How are you going to commercialize this? You can't do it alone. I'm not at Pfizer anymore. I can't pick up the phone and say, hey, I need another 500 reps over here, get them started tomorrow. What we're doing instead is we're bolting on to a company that has all of that, and it's world class. And here's the most important thing. We, Cingulate, keep that revenue. So we're going to pay for that service. And by the way, there's a very high probability they're going to invest with us, the company that we're bringing into this deal. So less capital, less risk, more effective sales. And then, of course, the market access side as well, working with one of the top groups in the market access area.
Fantastic. Shane, always exciting to you, to Roscoe, to the rest of the team. Have a wonderful weekend and happy holidays. Thank you so much.
Michael, happy holidays. Thank you so much. Well, good to see you again.
Great to have you here, as always. Shane Schaffer, the chairman and CEO of Cingulate. Moving forward into our next presentation, we actually were supposed to have them on at the beginning of the show. We had a slight delay. We were lucky enough to have an open slot and get them back on. So let's bring on Andy Ross, chairman and CEO of American Rebel Holdings. Andy, I don't know if I can hear you just yet before you get rolling. I'll make sure we're not having any issues here. I think he's muted. Let's see if we can get you unmuted on the stream so we can hear you. There it is. Should be able to hear you now.
Hey, good morning. Thank you for having me on. Apologize for the delays, and I'm happy to be here.
No worries at all. We got you now. We can hear you. Everything is good. We're glad to have you. Andy, it's a pleasure. Let's get started. Tell us a little bit about American Rebel. We've talked with you a couple of times before. It's a fresh audience, and I think everybody's going to be really interested in what exactly you guys do. Give us a little bit of insights about American Rebel Holdings.
Sure, and it's a very exciting time for American Rebel. You know, first and foremost, what American Rebel is America's patriotic brand. We got I had a TV show for 10 years on the Outdoor Channel. I did some music on the show. And then when iTunes and downloading and file streaming came out, the music got real popular. I had a song out called American Rebel. It went viral as a patriotic anthem. And in 2015, we decided to build a brand around it. And the obvious name was American Rebel. We launched our products. And as of February of this year, we're now a publicly traded company on NASDAQ.
Incredible. It's an awesome story. And sorry, Andy, I'm on and off the screen a little bit. I'm coughing like crazy over here.
Yeah, I'm having the same problem.
But we're getting it done. So now that we know who you guys are, right? What does it mean to be America's patriotic brand? What does that mean to you? But for the consumers as well, what's so significant about this?
Well, we're a lifestyle brand. We're trying to build as many products, quality products in the U.S., employ as many people in this great country as we can. Our safe line is doing extremely well. We're launching our American Rebel electric bikes at the SHOT Show here in January. We have our liquid fire coming out. We have our two-way lockers. You know, I think it's important that products are made in America. We're making a quality product. Everybody's buying into the brand. They call us the Safe with an Attitude. And, you know, the company is definitely moving forward, moving fast. Revenues are climbing, and we just couldn't be more excited where we sit today.
Outstanding. Okay, and with that context, I'm going to try and get through this. It's a bit of a mouthful, but tell us about your proprietary protection pocket. What is it about your products that makes them so unique? This one in particular.
Yeah, our concealed carry line features our proprietary protection pocket. A concealed carry line is simply backpacks, coats, and jackets that are designed to allow someone to carry a firearm safely and effectively outside of the home. Our proprietary protection pocket allows them to do that. Both we have one incorporated in our coats and our jackets, as well as in our backpacks. So what we're trying to do is, you know, we support, we're pro-Constitution, pro-Second Amendment, we're pro-gun ownership, but we're doing at American Rebel everything we can with all of our products for people to do it in a safe and effective way and be responsible gun owners.
Fantastic. Okay, let's talk a little bit about the business side, right? Your Q3 numbers showed a huge jump in revenue, especially year over year. How does your recent acquisition of Champion fit into this? Tell us about the Champion acquisition to begin, but how has it played into the revenue side?
Yeah, well, our flagship product right now is our safe line, our American Rebel safes. We manufacture about 6 different models of gun safes. We also manufacture vault doors. We make a safe specifically for dispensaries. But when we got in the safe business, a gentleman by the name of Ray Crosby, who I consider to be the godfather of the safe business, he was the original founder of Liberty Safe, which he sold many years ago, and then he started Champion and Superior Safe. So when American Rebel got into the safe business, we went to Ray to be our OEM manufacturer. And Ray, for a handful of years, manufactured great products for us, allowed us to get into the business, to get revenue going, to pick up dealers, really start to build the brand. And I told Ray the first time I was in his factory, I said, Ray, if you ever want to sell this company, I hope that you will call me first. And he said, Andy, we've barely started making your American Rebel safes and you already want to buy my company. Well, we went through some tough times. We went through some COVID years. Ray's, getting ready to retire, coming around turn 4. And he called us a while back and said, Andy, I think I would be interested in selling, but it would have to be to you. You said to call you first. I know you'll take care of my legacy, my brand, and let's talk about that. So as of July of this year, we actually acquired Champion Safe. And what that does for us is not only gives us the great brands Champion and Superior to add into to our American Rebel brand, but we got both factories, right? We got both of his factories, and they were already manufacturing our safes, so there's no learning curve. We got all the trained employees. We got Ray to help us out with a 3-year employment contract to continue to help us run the business. We picked up almost 400 dealers across the country, 5 distribution centers. So it really, really helped us launch this brand and get us down the road in a hurry. We've jumped up in revenue, as you mentioned, on pro forma basis, we're over a $20 million company right now. We had a third quarter revenue. We only got to count the second and third month of the third quarter. We did not get the full quarter, but we put out a revenue of 4.1 million. So yeah, the acquisition was a big shot in the arm for us.
Outstanding. Okay, and let's talk about the apparel brand too, right? You recently presented your new apparel lineup at a trade show in Colorado. What's new for the apparel side? Tell us a little bit about it.
It's version 3.0. We were able to add and perfect the protection pocket. New materials are coming out all the time. In every industry, right? So we were able to do this with instead of a Velcro or a heavy magnet, there's a new very thin magnet out. We were able to make the pocket, the proprietary pocket that holds the firearm, very secure but very easy to access and very quiet because it's closed with magnet. There is a material that works like Velcro, but it doesn't make the sound and have that ripping sound that Velcro has in it, which allows the proprietary pocket to hold the firearm a little tighter, so there's no bouncing around. If you were to start jogging or running or whatever, it holds it very secure. It's just a much more secure, effective way with also allowing easier and more capable and faster access to the firearm if needed.
Terrific. Okay, and you also just signed a letter of intent with an e-bike manufacturer. Tell us about your plans here. How do e-bikes fit into the brand? It seems like a bit of an interesting choice, but I'm sure you have a plan for this. How is this going to function going forward?
Well, let's say first and foremost, American Rebel is America's patriotic brand. I want Susie to go up to Mom and say, Mom, what's Dad want for Father's Day? And she says, honey, he wants anything with American Rebel on it. So American Rebel is expanding into other categories, but it's not necessarily another category. I mentioned we have almost 400 stores buying from us around the country, and a lot of those are full-blown sporting goods stores. Well, full-blown sporting goods stores want to see American Rebel e-bikes. They would love to see American Rebel dartboards, American Rebel kayaks, American Rebel grills. So they're welcoming the opportunity for us to put another American Rebel product in there. E-bikes are designed originally, I think there was a big green movement, and that's fantastic, bike transportation. They were designed, strictly for transportation. You see them all over. I just got back from New York. You see them all over New York delivering food, and there's a real economical value around them. But they're also becoming sport. If you saw what kids did in X Games with bikes and skateboards and these types of things, people are now looking for e-bikes to go mountain biking, to go trail riding. Sightseeing at venues. I just had a short conversation with a major car rental company out in Las Vegas that rents exotic cars. They're like, yeah, I'd like 1,000 of them just to rent out here in Las Vegas for the day for people who want to go sightseeing. They're really coming on strong in a lot of categories and for a lot of reasons. And American Rebels, we're going to get a piece of it.
Terrific. And how have consumers been responding to the patriotic messaging, right? How have you seen this change? Is there a growing market for this kind of brand? Obviously, you talk about, right, everything that we have should have American Rebel on it, right? That's obviously your end goal and your end vision. Is that vision growing with today's generation, today's culture, right? Do we see that kind of expanding?
Well, there's certainly a large percentage of the culture that are big fans of American Rebel. They're pro-American, pro-Constitution, pro-Second Amendment. They want to see products made in the U.S. They want to see quality products. They want to see more people employed in the U.S. And, we do have a fan base. We do have a customer base of like-minded individuals that are really rooting for us, pulling for us, and they can't wait to see, product-wise, what's coming out next.
Fantastic. Okay, now I want to talk a little bit about the regulatory landscape, right? How do you see that shifting when it comes to concealed carry? This is a big topic, right? A big one to dig into. It's obviously a huge talking point at all of our NRA conventions, everything that happens in our political landscape every day now, it seems like. But when you look at the landscape shifting when it comes to concealed carry, especially with public shootings, with some of the awful things we've seen in the media lately, how do you see this changing as we go forward? Is concealed carry going to be affected?
Yeah, we also see some public shootings that were where the person trying to do the harm was stopped by someone who was carrying, a law-abiding citizen that stood up and took care of the problem. So, you see a lot of positive around it as well. As far as, all the legalities go, we see all kinds of stuff. We see, it's no different than it's always been, right? It depends on who's in office and what the agenda is. And, they're always attacking the Second Amendment. They're always attacking some of our freedoms that way. And to this point, it's just been talking points. We haven't seen, the more they talk about it, actually, the more it fires up our industry and the more our sales go through the roof. There's some statistics that show when President Obama was in office, he was probably the best gun salesman the country ever had, because every time something comes on the table where it threatens our Second Amendment rights, our sales go through the roof. So really, whoever's in office, I don't believe there's any way that they can really attack the Second Amendment. We see some things on the books where they're talking about different states are trying to say, if you're going to be a firearm owner and have firearms at home, you need to keep them locked up, which obviously we manufacture gun safes. It's our flagship product. So although we're not for legislation to tell people what they can have to do in their own home, but it's all over the landscape, to answer your question. It's all talking points. It's always out there. And not much ever happens other than we sell a lot of product.
Okay, so obviously a big topic there. Let's talk a little bit more about the business side too, right, as we start to wind it down here. If the U.S. enters a recession, there's a lot of talk of the down-growing economy and all the issues we have right now. Give us a quick look at the expanding role of American Rebel in the market as you see it. And if the U.S. does enter a recession, if we go into a deflationary period here, is that going to affect your business, and how so?
We have been, I can't sit here and say any business is recession proof, and I certainly can't say American Rebel is, but I can tell you throughout we've been in the business now since 2015. And I can tell you, as we go through tough times, you could certainly say COVID in 2020, the economy wasn't great. We were kind of going through a recession because no one knew what the landscape of the world was going to look like, for sure. Anytime there's doubt, anytime there's when the economy rolls around, that seems like there's an increase in violence, increase in theft, increase in riots, those kind of things. It actually gives our business a shot in the arm. You can look throughout history and see that when tough times come, sometimes more violent activity comes. Sometimes it moves, not just in the cities, but out to the suburbs. And gun sales usually flourish. If gun sales are going up, gun safe sales are going up. The new gun owner is a very responsible gun owner. When I grew up around guns. So, I had 16, 18 guns before I ever bought a safe. I had them as a kid. I had them in the back truck window and went to high school and duck hunting before high school. But today, I think they're very educated. Someone goes into the store, they might even buy just 2 firearms and they're buying a safe. So, and I think the gun owners of the past are coming around saying, hey, we don't want, neighbor kids getting a hold of our guns. We don't want, them falling in the wrong hands. We don't want our grandkid playing with them. Let's get a safe and lock them up. So, the safe's becoming the new home appliance. I don't think, recession, people keep more valuables at home. I'd hate to see a recession, but I think it works in our favor.
Understood. Okay, interesting take there. And let's do another kind of hot take question, right? Over the next 10 years, right, how do you see gun ownership changing necessarily? Or not even just gun ownership, but American Rebel products as a whole, right? Obviously, you're moving in an interesting direction with the e-bike manufacturer. It's clear you're looking to expand that product line. Do you see the ownership of any of your specific types of products expanding or decreasing depending on the culture of our country and the way we're changing today?
Well, I think American Rebel will definitely expand because, as I said, we want to be America's patriotic brand. So we're going to continue to do product offerings. We're going to try to stay, in our lane. We will design products and launch them out. We will work with, we will build and manufacture our own products. We will use OEM factories. We're looking at doing acquisitions. Understand, if we do an acquisition, let's say we buy a $20 million wheelbarrow company, to be as generic as I can. We buy a $20 million wheelbarrow company. We want to grow that company. We want to grow that revenue. We want to grow top line, bottom line, but we can also take 8 of the top selling wheelbarrows, brand them as American Rebel, and sell them to our 400 plus stores. So we can sell it under our brand as well. So we can do an acquisition, immediately double the SKUs. And we're also going to do licensing. I don't particularly want to make an American Rebel pool cue, but there's a pool cue company out there that would probably like an American Rebel pool cue that we could help them market, and we would do that through a licensing agreement. So we got design, manufacturing, product expansions, acquisitions, and licensing all at our fingertips to grow this brand.
Okay, in 2023, right? We're at the end of the year here in 2022, the year ahead. What's big for American Rebel Holdings? What should we be looking for? What's exciting to you about the brand of the next year?
Coming out in 2023, you know, it kicks off with our Super Bowl. We've got the SHOT Show in Las Vegas coming up January 17th. So it's a 4-day show. It's one of, you know, again, it's kind of like the Super Bowl of our dealer only shows. It's not a consumer show. So you'll have everybody from the mom and pop stores all the way to the big box store buyers there. And we'll be introducing our Liquid Fire, our American Rebel 2A lockers, American Rebel e-bikes. We'll be showing our American Rebel safes. We'll be showing our new American Rebel Constitution line, our Defender line, our price point American Rebel Patriot line. We'll be showing our American Rebel 2A lockers. We'll also be showing our Champion safes and our Superior safe line, which is our new acquisition. So we've got a great big booth. It'll be packed full. And as always, when we show up at a trade show, we are the booth that everybody hangs out at, the booth that everybody wants to be in because it's exciting. We got a lot going on. And, you know, I can't think of a better way to kick off the year than all of these product launches at the SHOT Show with all of our like-minded patriotic family just having a good time and celebrating our freedoms.
All very exciting. Andy, it's always a pleasure to have you here, of course. For anybody that wants to learn more about American Rebel, too, right, and what you guys are doing, socials, obviously you talked about the show that you guys used to have. Where's the best place to go and follow you guys for what you're doing?
For American Rebel, no doubt about it. Catch us on social media at American Rebel. Catch us at AmericanRebel.com. And we're not hard to find. Google us. We're out there. We're everywhere. And we look forward to hearing from you and hope you become a part of our patriotic family.
Amazing. Andy, always great to have a conversation with you. Really excited to see what you guys are doing next. Have a wonderful weekend, and thank you, as always, for joining us.
Thank you very much. It's been a pleasure.
Always, Andy Ross, the chairman and CEO of American Rebel Holdings. Moving on to our next presentation, staying pretty good on time here. Actually, we did have the pleasure of doing a pre-recorded interview with a company that wasn't able to make it today. We're next going to hear from Daniel Roberts, the co-founder, co-CEO of Iris Energy, traded on the NASDAQ as IREN. We're going to play that pre-recorded interview for Iris Energy, and then we'll come back with our final presentation for All Access. And welcome. We're here in Benzinga All Access. We have the pleasure of getting to do a pre-recorded session with Iris Energy. We're going to bring on their co-CEO and get things started. Really excited to be able to have these opportunities to get a pre-look with some of these companies before the actual All Access itself. We're pre-recording here on a Thursday in Detroit. We're going to go ahead and bring on Daniel Roberts, co-founder and co-CEO of Iris Energy, and get started.
How are you? Pleasure to be here.
Pleasure to have you here, Daniel. Thank you so much for joining us. Kick us off. Let's get started by learning a little bit about Iris Energy. What does the company do?
So Iris Energy was established about 4.5 years ago, and we're a sustainable Bitcoin mining business. We use 100% renewable energy. We have since inception. We've got 3 facilities in Canada, British Columbia, and a new facility in Texas, up in the Panhandle region in a town called Childress. Our approach has been to bring an institutional grade exposure to this asset class. So we don't do shipping containers. We don't do old abandoned warehouses. We build, own and operate our own proprietary industry leading data centers. We own the land, the infrastructure, the substations, the grid connections. And really for us, with our backgrounds in traditional infrastructure, commodities, renewables and data centers, it's really been about translating that skill set and experience across to what's an emerging asset class.
Terrific. Okay, we've got a lot of exciting stuff to dive into, knowing what Iris Energy is all about. You talk about the 4th industrial revolution. Can you talk a little bit, maybe even about the 3rd industrial revolutions, what's going to be different about this one? But what is this 4th revolution going to be, and how does Bitcoin mining fit into it?
Look, everything's going online. The whole world is being digitized, and we're migrating from the physical world of manufacturing, the physical world of the way we engage with each other. Classic case in point is Blockbuster and Netflix. Netflix, superior product, digital exponential network, as compared to the physical equivalent. And one analog for Bitcoin is gold 2.0. in a world where all these other physical industries and physical assets are being disrupted by their digital and social equivalents, Bitcoin is exactly that. In terms of what makes gold, transferability, divisibility, durability, scarcity, Bitcoin objectively is an order of magnitude better at being gold than gold is, yet it's still 5% or under of the market capitalization of gold. So we think there's a lot of upside in Bitcoin over time. And when you step back and look at Bitcoin mining, at the end of the day, what we're producing is high performance computing data centers. So rather than locate data centers in capital city locations where they're close to customers, really low latency, high reliability, high redundancy, we see the next wave of computing really being a key part of finding low cost excess renewable energy and being constructed in fit for purpose facilities. Things like data analytics, machine learning, rendering for augmented reality, oil and gas reservoir analysis, all these applications that don't necessarily need those bells and whistles of expensive capital city data centers. Instead, we're going to the source of low cost renewables, building fit for purpose data centers, and really looking to capitalize on that thematic. In the first instance, it's Bitcoin and Bitcoin mining, but longer term, we're really excited about what else the platform could pursue.
Outstanding. Okay, now when it comes to specifically what you guys do, how do you ensure that your energy is sourced from green sources? What challenges does this commitment to green sources present for you guys? Does it change anything about the way you run your business?
Look, it does, but it's actually, rather than a challenge, it's the opportunity. When you step back, renewable energy is actually the cheapest form of energy when you look at it on a marginal cost basis. There is no feedstock. There is no commodity input. So once these projects are built, the wind blows, the sun shines, the marginal cost of production is extremely low. And our whole strategy has been around entering Western energy markets where there has been an overbuilding of renewable energy, whether it's hydro in British Columbia, Canada, whether it's wind and solar in Texas. So it's actually a very conscious economic decision to make sure that our cost of compute is in the lower part of the cost curve, in addition to being the right thing to do.
Excellent. And talk to us a little bit about the leadership team at Iris Energy, right? With all these initiatives that you have, the way you run your business, the commitment to green sourcing, what does the leadership team really contribute to the company as a whole when it comes to pursuing all of these initiatives?
Yeah, look, in 2022 has had its ups and downs and challenges, as we all know, and we're looking forward to 2023, but the leadership team has just been fantastic. You know, we've grown substantially over the last 12 months throughout this bear market. Rewind 12 months ago, we only had one site of 30 megawatts. Fast forward to today, we've got 160 megawatts with another 20 megawatts being constructed early in the new year. So it's been a period of rapid growth. It's a fantastic culture. We've been able to attract and retain high quality people. We fundamentally believe that we're still on the right side of this exponential tailwind at a macro thematic level, particularly with Bitcoin. And we're here to grow. We've got a lot of upside in terms of additional development sites, additional projects we can build. And as the market rebounds, we're really excited about growing into that environment.
Terrific. Okay, and then what portion of your mining rewards do you keep as Bitcoin? What portion do you sell for cash? Can you take us through that distinction a little bit when it comes to Iris?
Yeah, we've been a bit different. We liquidate it all daily. That's not to say we're not bullish on Bitcoin. Far from it. Personally, I hold most of my savings in Bitcoin rather than Australian dollars or US dollars. But when it comes to a business decision, there's a few things. One, we don't understand why our investors should be paying us to hold Bitcoin. We don't see the value that we're adding sitting on a static asset. In fact, if we're generating sufficient cash flow, wouldn't it be a better use of cash to pay that out as distributions and let people buy the Bitcoin and hold it themselves if that's what they choose to do? Ultimately, our competitive advantage is building, owning, and operating real assets, infrastructure. The management and board collectively has built over $25 billion of infrastructure projects globally across their careers. That is our skill set. We can derive an operational return from this asset base. In addition, if you don't liquidate Bitcoin each day, as we've seen over the last 12 months, you sign up to a lot of additional risk in your business. And at the hallmark and foundation of our business is managing risk. it's all well and good when Bitcoin's in an upswing and goes up. Yes, you're making lots of money, but when Bitcoin starts coming down, not only are you getting hit on your P&L, but your balance sheet is also under pressure as well. Now, you then compound that with a number of other parties who have borrowed against the Bitcoin on their balance sheet and then being margin called and actually forced to sell at the bottom. So, look, never say never, but economically and financially, the rational thing for us appears to be not to hold Bitcoin. And one thing I'd add further is because we're a business that's capable of growth and execution, which we've demonstrated, another way to think about it is we mine a Bitcoin today, we can either park that Bitcoin and sit there, or we can reinvest that Bitcoin in additional facilities and produce more Bitcoin on a recurring basis, the latter of which sounds like a much better compounding strategy for our shareholders.
Amazing. Okay, now something new that you guys are working on too. You just had a new site come online in British Columbia, I believe, correct? And you're currently building one out in Texas. What do these projects mean for the future of Iris? Can you give us some insights here?
Yeah, so we've had our first site in Canal Flats operating for a few years now. We've brought on 2 new sites through the course of 2023, both in British Columbia, Canada. So one in the town of Mackenzie, another in the town of Prince George. The initial capacity of each site was 50 megawatts, and then we're in the process of commissioning an additional 30 megawatts at our existing Mackenzie site as well. So that's 160 megawatts of data center capacity and power available in British Columbia. And then we mentioned earlier the next site in Texas, which is actually a 600 megawatt site. So we're in the process of building out the 600 megawatts of high voltage infrastructure, the grid connection, the switchyard, etc., and building out the first 20 megawatt data center as we speak.
Fantastic. Okay, so when you come down to the relationship with Bitmain, right, which is something that we were particularly interested in digging in here, you just announced you're making use of a portion of the $83 million in prepayments to the company. But what exactly use are you getting out of that $83 million? What's the plan for the remainder that you didn't use for Bitmain, and what are all these funds going to go towards?
Yeah, so that 83's already been reduced to 75 with the $8 million of cash now in our bank account. And maybe to step back and explain this is cash, US dollars, that we have previously paid Bitmain as deposits for new machines. We've been in the process over the last few months converting those deposits into cash in our bank account. I think $75 million today, as we sit here, is about the value of our market cap alone. So it represents a substantial potential asset to the business. So we're in the process of continuing to monetize those deposits with Bitmain, whether it's for our own purpose by contributing additional capital, unlocking the deposit, receiving machines, or perhaps on selling those machines and deposits to third parties for them to be able to use.
Awesome. Very good. And then what is the key to surviving this downturn for Bitcoin miners, right? A bit more of a thematic question here and something that's a bit larger scale for you guys. But how low can Bitcoin get before we see major mining operations closing their doors? And how do you think it's going to affect the industry moving forward?
So how low can Bitcoin get before we see miners struggle? I think we're there. We saw the difficulty adjustment go down 7% last epoch, which refers to the global hash rate, the number of miners globally who are mining Bitcoin. And that was directly off the back of Bitcoin having its latest drawdown from around 20,000 down to 16, 17,000. And that's indicative of what happens when miners can't pay their power bill. So you've got a cost curve like traditional commodities. When miners who have a high cost can't pay their power bill, they have no option but to switch off. And what that means is as they leave the market, the share of the rewards that are now available to other miners such as Iris increases. So we actually have a volume hedge. So if Bitcoin goes down, high cost miners switch off, we start receiving more Bitcoin each day, giving us some downside protection around that. We've been mining single digit thousands per Bitcoin all year. We're about 10,000 last month on an adjusted basis after we account for some demand charges. And look, believe that right now we're quite competitive in the cost curve, largely because we've chased low cost, excess renewable energy and haven't been exposed to commodity price inflation that we've seen in most other deregulated markets.
Understood. Okay, and of course, to talk about one of the biggest topics that's been in the crypto industry and with Bitcoin recently, the collapse of FTX. In light of that, how much farther does that situation have to go? And does the contagion stop with just FTX and the immediately related situations? Do you believe there are collapses on this scale still to come in this industry?
Look, never say never. This industry never ceases to surprise, and we're very much in the camp of Bitcoin rather than crypto. I'm not a crypto guy. I think Bitcoin is a monetary asset. It's been a finished product for 13 years. It's grown from a cent to a $300 billion market cap. Yes, people complain about volatility, but I'm not sure how you grow from a cent to $300 billion without a bit of volatility. The rest of crypto, I think, is still looking for that killer app, looking for that use case. Reality is most of it, if not all of everything other than Bitcoin, is centralized because you need developers, you need code updates. They're looking for different problems to solve. When it comes to things like FTX, that's just a breakdown in corporate governance and regulations. At the end of the day, these are unregulated offshore exchanges that just played with customer money. It's as simple as that. It's nothing to do with Bitcoin. I think when you looked at the Chapter 11 filings, FTX owed their customers 80,000 Bitcoin, which means people like you and I thought we owned an aggregate amount of 80,000 Bitcoin sitting with FTX. Those Bitcoin didn't exist. And that's part of the challenge. And that's why the move towards self-custody, people looking after their keys, the move towards regulation where people can keep their Bitcoin in an environment that they can trust and are happy to trust will be an important development over the next year or two.
Absolutely. Now, to talk about the regulation side of that, right, when you take into account the massive meltdown with FTX and what's happened in this industry, do you see any significant regulations coming that are going to affect Bitcoin mining operations, especially in regard to penalizing non-renewable sources of energy? Do you foresee any issues with the government side of things regulating this after the meltdown with FTX and everything associated with it?
Look, when it comes to Bitcoin mining or any industry, I think it's very dangerous for government to start coming in and separating out industries from other industries. When you look at Bitcoin mining and the composition of renewable energy globally, I think it's one of, if not the most green industry globally in terms of the percentage that comes from renewable energy sources. And that's just a product of the nature of this asset class. We can go and co-locate close to the source of those low-cost renewables. You're not wedded to existing logistics channels and ways of building manufacturing facilities. Will we see regulations get passed regardless that seek to clamp down on non-renewable sources? Possibly. I think we'll see that generally in the world going forward as well. But look, for us, not only is the cheapest form of energy and cost competitive, it's also a hedge against that type of regulatory risk if it does emerge.
Absolutely. Makes a lot of sense. And then to kind of look ahead here, more of a hot take kind of question, right? But in 2 years, in 20 years, in 30 years, what is the future of Bitcoin like? How is this industry going to scale? What's going to have to happen to get the price of Bitcoin up? And where do you see it moving after that? Is there a long-term progression plan that you see that could be potentially happening here?
Yeah, look, to get Bitcoin up, it's more buyers than sellers, like any asset. And that's not to be flippant, but one of the key attributes of Bitcoin, which people are understanding over time, is scarcity. It is the first commodity in human history that it has absolute scarcity. You compare it to gold, which is the next best scarce thing that we've had, and gold supply goes parabolic over the long term. 2% year on year compounds. After 35 years, the value of what you own is halved. After 100 years, it's 7 times lower. It's not an effective tool to pass down wealth, which is why you see people use things like real estate and other asset classes as a hedge and a way of storing their value. So when you look at it through that lens, again, in a world where all these physical industries, and whether it's a yellow rock or it's movie stores, are being disrupted by their digital social equivalents, you look at Bitcoin, to hit gold parity, which is around a $12 to $13 trillion asset class, you divide that number by 21 million and you get $600,000 a Bitcoin. It's currently 17,000. If Bitcoin survives, it's very difficult to see how it stays as a $17,000 asset. In addition, you have these catalysts every 4 years called the halving events, where across the space of one 10-minute block, the amount of new Bitcoin that's created is halved. So overnight, within that 10 minutes period, you've cut that supply in half. So go back to my earlier comment, more buyers than sellers. every 4 years it's pre-programmed that the number of sellers is, or potential sellers, is halved. And what we've seen historically is within kind of 6-9 months of that halving event, that supply shock finally bites. There's no more Bitcoin that people are willing to sell. People have to pay a bit more. People then pay a bit more. And again, you get the latest hype cycle, parabolic run getting started. It overshoots like everything. People launch another 10,000 altcoins, bubble pops, flatlines, and we wait another few years and the same thing happens again. When you zoom out and look at the long-term logarithmic chart of Bitcoin, it's a pretty clear straight line from left to right. Yes, it's volatility, but it's volatile through these order of magnitude price changes over time.
Absolutely. That makes so much sense. And a final question for you too, zooming out here again, more on a macro theme. When you look at the overall economy, right, the US potentially going into a recession, the issues we're seeing on a global and macroeconomic level, do you see anything in terms of a recession or a pullback in US equities or the markets as a whole that might affect Iris Energy? And if so, how do you guys plan to hedge those moving into 2023?
Look, the system is getting to the point where it's very hard to make any predictions when the whole economy turns on what a group of old people in a room decide in terms of what the price of money is. And we've gone from $80 billion of US dollars in circulation, base money in 1971, to $5.3 trillion today. That's an 8.5% year-on-year growth rate. Property prices aren't going up. The stock market's not going up. All you're doing is trying to keep pace with the number of US dollars that are being printed every day. And the only way to keep that system going ultimately is to continue printing dollars. So yes, the Fed Reserve will jump up and down and try and raise interest rates here and there, but ultimately the system is broken. It can't afford higher interest rates. The only sustainable way is to continue to lower it. So we think it's when, not if, that rates come off. Yes, there might be a technical recession as traditionally defined in the US. A lot of people are in pain. And I think when you boil it back, there's some fundamental issues when people look at an economy and say, post-COVID, we've had all these supply chain issues, manufacturing goods and services, prices have gone up. So rather than working out how we solve that, how we make more goods and services, how we solve supply chains, what we're going to do is raise interest rates and make it so you can't afford to buy anything. If you can't afford to buy anything, then prices must fall because we're going to raise interest rates so you can't make your mortgage payment or afford to go and buy those discretionary items. So the system, I think, is coming towards this inflection point where it's not sustainable, and it's going to be really interesting to see how it plays out over the next few years.
There's no doubt about that. Dan, it's been really exciting learning more about Iris Energy, but your perspective and your take on the markets as well and what's happening around you guys, Bitcoin and everything else. A lot of stuff you're in the middle of. We can't wait to talk with you about it again soon. Dan, thank you so much for joining us here.
Absolutely. Pleasure to be here. Thanks for having me.
The co-founder and co-CEO of Iris Energy there, traded on the NASDAQ as IREN, pre-recorded yesterday. Again, running a couple late on some of those scheduling things, so we get to pre-record these so we can keep a full show and keep it running. But with that, we're going to go ahead and move into our next presentation, which is actually going to be Adam Michaels, the CEO of MamaMancini's, traded on the NASDAQ as MMMB. Let's bring him on and get started. Adam, great to have you with us. How are you?
Hey, sir. How are you? Thank you so much for having us.
Fantastic. It's a pleasure to have you guys here. Really excited to learn more about you and the company. I know our team had a great time during our prep calls this week looking into you guys and what you guys do, so we're excited to get started. Give us an overview of what you guys do at MamaMancini's.
Absolutely. MamaMancini's actually started as a Italian heritage brand, Dan Mancini. I am lucky enough to get to hang with Dan all the time. He is still the guy that's on QVC 3 days a week. He's the guy that's helping us in the kitchen. Just absolutely incredible. So this is a business started about 10 years back, and we've had big things change. So last year, at the end of last year, we made a couple of acquisitions and really moving now into our strategy to become a one-stop shop deli solutions provider. So think of it, everything from the famous meatballs that got us started, bought a company called T&L Creative Salads that got us into different types of salads, paninis, chicken, bought a company called Olive Branch that makes olives. And now hopefully what you're seeing now is everything behind the counter of a deli at any of your Publix or Costco or wherever. Anywhere in the hot bar, anywhere in the prepared food section. we're providing a solution for all of those. So it's been great. It's been fun. Things have been moving fast, and I love it.
Amazing. Now, obviously, there's a great backstory to this company. You already mentioned it a couple of times, and we're going to dig into that more. But tell us about the grandmother. There's something really significant with this story. Give us some
Yeah,
backstory.
Anna MamaMancini's. There really was a MamaMancini's, Dan's grandmother. She came on 1921. Dan grew up cooking with his grandmother, and yeah, we're lucky enough. Like I said, about 10 years back, Dan realized that he shouldn't keep all of the beauty and all the flavor to himself, and we started sharing it out, starting in grocery stores, continuing to expand. Now we're a national player. So we have retailers across the country. Again, starting in Italian heritage brands, but continuing to expand outward to become that one-stop shop solution for our deli buyers. But Dan's incredible. Like I mentioned, the energy that he has, you just can't beat it. He's going on the sales calls with us. I told you QVC is a big strategic partner of ours, and Dan goes on there. It's wonderful. Anna is with us. Actually, my favorite, we actually have a monthly, we call it a grandma quality meeting. So Dan, our head of R&D, we get together. We're constantly retesting our products because we have to have the absolute highest quality. And literally in the meetings, Dan, would Mama be happy with this? Is this what it tasted like when Mama was making it for you? So constantly coming up with new ideas, making sure they're at the top quality, highest quality items. So it's wonderful. I really, I'm so fortunate to be a part of it. I just started, but just so fortunate to be a part of it.
That's amazing. We love the backstory. And you talked a little bit there about ingredients, right? The highest quality, making sure everything is up to standard. How do you guys go about sourcing your ingredients? What kind of ingredients do you use? How do you make sure that everything is up to par?
No, it's incredible, and it's super fresh. So again, what's really important is we know consumers are looking for fresh, clean ingredients. You know, we pick, and I could do it for all of the items, but you pick our meatballs. Our meatballs literally only have 6 ingredients. So ground beef, pecorino romano cheese, eggs, breadcrumbs, parsley, onions. That's literally it. Actually, if you want to cheat, there's some salt and pepper, but I count that as a spice. It's literally that, just like his grandmother made them. All of our products are domestically, all of our commodities, the beef, obviously the chicken, vegetables, they're all, coming from America. We do import, obviously, the really hardcore Italian stuff, the pecorino romano cheese, but it's, again, just the cleanest ingredients, exactly like grandma made,
Rich history, and you can feel it in this kind of presentation. It's really, really awesome to hear.
It's great.
Now, you're vertically integrated, right? Why take this approach as a company? What are some of the benefits here, and how does that help MamaMancini's do what it does?
No, absolutely. I'm glad you brought it up. So yeah, so end to end, we're doing it all ourselves. So up front, I mentioned to you, Dan and Chris, our chef, are coming up with the innovations, developing the R&D. We manufacture ourselves. We actually have 2 manufacturing facilities, make all of our own products. We're doing our own quality assurance, so it's actually something that we brought in-house. And obviously getting it to customers. What makes it so important is, one, you never question quality. We are watching it. We are touching it from every step along the value chain. Absolutely incredible. Maybe just Dan and I are paranoid, but we don't trust anyone else. So we're holding it every step of the way. The agility. So literally we can make a phone call. I mean, actually you could see our facility is actually right behind me. So you can't get any closer. I'm there every single day. And we have another facility in Farmingdale, Long Island. But the agility to take the decisions when we need to adjust, refine things. We're constantly tasting our products. And then cost. We're able to manage our costs a lot better because it's all within, I could physically touch every part of our value chain. And I think that makes the product better. It makes us more competitive when we price. It's great. So yes, very important for us.
Awesome. Okay, again, really good insights there. What does it mean to be carried by retail giants like Walmart and Costco, right? You talked about being a national player, which is obviously really impressive, but what does it mean to be carried by some of these bigger players like Walmart, Costco, some of those larger food brands that carry all of those bigger national players? Is this a big, I'd imagine this makes a huge impact for the company.
So what's really important, as big as we get, and we're working on our quarterly earnings just came out actually on Monday, $25.7 million. So more than $100 million run rate we're on right now. But we're still, I guess, maybe just in our hearts, we're still small. We have amazing relationships with these deli buyers. We have a great sales team, a great broker network. And again, like I mentioned, Dan's going to all these meetings. So there's something special. Yes, we're big and we're getting bigger faster than than I expected, which is great. But it's very handshake, very seeing our products in the store behind the shelf. So if you think of the deli again, we're in multiple parts of the deli, right? So we're behind the glass, right? So you go up and you look at those beautiful jumbo meatballs or the sausage and peppers or the Mediterranean farro. There's that piece of it. There's also in the hot bar, right? So think lunchtime, kind of grab and go. We're in the prepared food set. So one thing that we're seeing, there's a couple things. So unfortunately, we're all feeling it, the recession, it's making it harder for us, right? So one of the first things that people pull back on is going out to eat at a restaurant, but they want that same quality food, and they actually want it. They don't have time to spend 6 hours braising their meatballs. One thing that's really important, and we're seeing is people are pulling back on restaurants and coming in. They want restaurant quality. Sorry, they want grandma quality. Dan would yell at me if I did that. So they want grandma quality at grocery store prices. So you go and you're in the city and you decide you want some chicken parm or something for, I don't know, what is it, $18-$20. You got to pay tip. You got to pay for the taxi both ways. You got to pay tax. $25 for that meal. You come in, get that same quality. Actually, I would tell you better quality for $9.99, and there's your fully prepared meal on a bed of pasta, chicken, sausage and peppers. Balsamic chicken. We have an amazing balsamic chicken, which I love. And it's great for the consumer, right? Because they get a high quality product at a better price for their family.
It's funny, in talking about all this too, I actually just messaged producer Aaron while we were talking. I'm like, we're doing pizza for lunch today. I'm like, you are making me really hungry right now. This sounds fantastic. I love the sound of all this.
I am telling you, I'm sure no one's, don't tell my board, but I do this job for free. It's amazing to be able to come in. We have these meetings. The best call I could get is from our chef. Hey, we're trying some new products out. I am not hurting for lunch. It's awesome.
I love that. Doesn't sound like there's any better job out there. I absolutely love that.
I am so lucky.
That's incredible. And again, the backstory was one of the best parts of this. Now, you talked about QVC already a little bit, but you were recently awarded 4 QVC Consumer Awards for this year in 2022. Tell us about that. What does this say about your brand? Why is it impactful for you guys, and how big of a thing is this to be able to advertise?
No, it's great. Yeah. So 4 awards. This is like the Emmys of QVC. So best, most recommended brand, best plant-based, best meatball. Absolutely incredible. So for me personally, my favorite is we're constantly. It's a very engaged consumer base that we have. We're constantly getting calls. We're constantly getting emails, tons of emails. And what's great is I get to be copied on all these emails. Dan literally responds himself to every one of these comments. Some of them, I just love your meatballs. Actually, the biggest complaint that we get is, wait a minute, I had your meatballs at Sam's Club, or this or that. Where do I get more of them? And Dan's incredible. You can actually go on our website, and we added a new piece to our website when I started 3 months back. To now, you just type in your zip code, and it will tell you exactly where to, the closest places to you to get it. So you can check that out at MamaMancinis.com. But it's great. Dan's engaged to connect with our consumers, and I think that's why we win. So Dan tells an incredible story on QVC. The product just tastes amazing, and then I think this engaged consumer base that we have, that we learn from each other, we get feedback from our consumers. We do a lot of consumer testing. So in my old world, a couple of jobs back, I was responsible for our North American consumer insights. I used to be at Mondelez, at Nabisco. And I'm so passionate about my 330 million friends around the country. Let's get feedback from them. It doesn't matter what I think. It matters what they think. So we're constantly using surveys and focus groups to refine our products. What's the next product? Poor Dan is always on the hot seat because, hey, I want this, I want that, I want to try this. Dan brought in an amazing soup the other day. I mean, it's just, it's a blast.
That's awesome. I love to hear that. And I'm actually on your site right now too, looking around. And the reason I mentioned getting pizza is there's a place here in Detroit that we really enjoy that has these terrific meatballs. We get them every time we go out and get pizza for our office. And I'm looking at these, and it looks better. And I want to try these. They look fantastic.
I know a guy that knows a guy, so I could get some over to you. But no, something, it really is, because it's the ingredients. There's no preservatives. There's nothing in there except those 6 ingredients that I mentioned to you. And they, it's very funny. Obviously, I have a lot of friends from Italian heritage, and when I first bring them the meatballs, first of all, they're almost disrespected. Like, I can't eat anyone else's meatballs. I can only eat Nana's meatballs. Like, try them. Do me a favor. And they're like, wow, they're pretty good. Like, don't tell my mother, but I could eat these more often. So it's great. Again, just the freshest ingredients. Just an amazing legacy that goes back a long time.
That's awesome. Yeah, I love that you mentioned the ingredients too, right? The no preservatives. It's such a huge part of what you guys do, obviously, and it's great to hear. Another thing we wanted to touch on too was the new CFO you guys have put in, Anthony Gruber, right, in September. What has he brought to the table so far? What is the impact of your board and your management team? You've talked about Dan, right, and the quality meetings that you guys have. The rest of the team, right, and the rest of the executives. What part does everybody play in making all this come together?
No, it's so. I am so lucky. Again, hopefully the board's not listening. I do this job for free. So first of all, the board is incredibly supportive. So we've been doing this for a little bit. I love the challenge and the learning. I'm learning so much. We have just such an amazing board with such great experience. You mentioned Anthony. I'd be lost without him. So it is great to be able to come in. One of the things that I told myself and I told the board when I got this great opportunity to be the custodian of MamaMancini's right now, I said I want to bring in a new CFO. The level of control, the cash management that we have. So I think we actually cut down our debt like 30% the last quarter. We doubled or tripled our cash position. Cash flow from operations now are very, we could fund anything we need to be funding now through operations. Very much to Anthony's credit for cleaning us up and getting us in the right position. So I don't lose an ounce of sleep at night knowing where we are from a financial position. So it feels great.
It's outstanding. The team is everything. That's great to hear.
Absolutely.
That's awesome. Now, we talked about the numbers, right, with Anthony and everything he's doing. Q3 numbers were very strong, 137% revenue growth for the quarter, year over year. How did you guys achieve this, and is it going to continue? Do you see this revenue growth continuing to climb as we move into next year?
Yeah, no, it's great. I definitely feel that the best is yet to come. So there are a couple things. So obviously, one thing that's really special, I mentioned to you that we acquired a company last year, the ability to cross-sell those items. So historically, we had a great stable of these Italian products, and we were able to sell. We have great relationships with the deli buyers. What now we're able to do is our team's able to come in and say, hey, obviously, because we've been doing this for many years, high quality, great service. Props to Matt Brown, our COO, who even during COVID, our service levels are incredible. We're now able to say, hey, we have these grilled vegetables here. Hey, we have this, Israeli couscous. Hey, we have these amazing buffalo paninis. Hey, we have this great black bean and quinoa wrap. Oh, that's great. I would love to try those. So we're always having the meetings. So what's been happening, the cross-selling has been awesome. And it's very funny. I don't know if it's good or bad. So one of our major club store customers, we've had a long, strong legacy with our meatballs. We introduced them to our chicken products and our panini products. We are now selling more T&L products than we did the original meatball products, which I guess is awesome. Some friendly competition within the organization, but that's what we're able to do. So we've, for all intents and purposes, doubled, actually probably tripled our portfolio of offerings. And that's what's driving so much of the growth, the ability to cross-sell new customers. So we mentioned we got 3 new customers this past quarter, and we know we actually got 3 more customers that we're already starting to ship in Q4. So between the new customers, more average items carried in the store. So right now we have, let's call it 5 to 6 average items in the store. Obviously, some customers, we have a lot more. I can name you right now 20 items that should be in the store, between 3 chickens and 3 meats and 3 sandwiches and 3 salads and 3 olives. So we have this company called Olive Branch now that we're selling olives. So what you're able to see here is people can have 3 or 4 items on their plate from MamaMancini's at a typical dinner or lunch or on the go. So it's great. And so that was long-winded to say, feel great about the quarter, so proud of the team. There's the best is actually yet to come, I promise.
That's so exciting. And that's actually the last question we have, too, right as we wrap, is 2023. How are you guys going to continue to evolve, continue to offer new things? What are some big growth milestones you're looking for?
Yeah, absolutely. So next year, I think, is going to be an even bigger year. So I mentioned to you the ability to cross-sell. We're just in the beginning. I'd probably tell you, if I had to guess, only we're 25% through this opportunity to cross-sell. So I still have 75% of customers that we're starting to have these conversations with. That feels great. We have some exciting new innovations. Meatballs in a cup is a new innovation that we have. Look at this. So this is a amazing on-the-go solution. So we do really, really well with our grocery store customers, with our mass and our club store. We really haven't broken into the convenience channel. This is that solution for our convenience channel. So we're already having meetings with convenience customers. Huge opportunity. Incremental channel with C-store. Incremental consumer base. It's a younger audience, and an incremental occasion. Most of our items are center plate. This is an on-the-go solution. 15 grams of protein, all clean ingredients, 250 calories. It's awesome.
It's incredible. Adam, it has been such a pleasure talking with you. You're clearly passionate about what you do.
I love what I do.
The team and what you guys are doing, it's incredible to watch. And obviously, you've got a big year coming up ahead of you, but an absolute pleasure talking. Thank you so much.
Thank you so much. Enjoy. Have a great weekend.
You as well. Adam, take care. Adam Michaels there, the CEO of MamaMancini's. Really interesting discussion. Obviously, a lot more big things to come. For our final sponsor and our final participant for All Access in the year of 2022, we're now going to speak in our last slot with George Holmes, Chairman and CEO, and Dave Massey, Co-Chairman of Solar Integrated Roofing Corp. Let's bring them on. Gentlemen, how are you?
Great. We're hungry now, so it's
aren't we all, right? Like I said, I was messaging my team right during that. I'm like, we need some Italian pizza after this. That was wonderful. Yeah, I'm starving. I hear you both. Well, guys, it's great to have you joining us. Thank you so much. Our final participant of All Access for the year. Quite the special occasion. Kick us off a little bit and tell us about what you guys do.
Hey, good morning. I'm Dave. I'm the former CEO, founder. We started in 2016 as a solar roofing company, and we've grown by acquisition. Over the last 6 years, we've done 14 acquisitions and grown into a full-service clean tech company. We currently have a residential solar division. We have a commercial solar division. We have EV charging and microgrids as well. And we can service almost any type of solar or roofing need for commercial or residential.
Excellent. And gentlemen, you're both joining us here. This is kind of a time of change, right? A passing of the torch, so to speak. Dave, why did you feel that now was the right time to hand the reins over to George? What is those changing roles going to look like? And how do you guys plan on moving forward with this?
We've been growing quite a bit with our numbers, and this has been about a 6-month process. George and I have been working on together. We started out getting our books audited for the uplist. We've filed the Form 10. We're really looking to move up to a higher exchange. George has all the ability and all the skills to lead the team. I think if you get to know George after this interview, I think everyone will be very pleased with our choice. He's the leader of the team. We brought in George as CEO. We brought in Stefan Abruzzi as our new president, and we have Marty as our new CFO. And George is a great leader. He's done a great job.
Terrific. And then George, I'll turn it right back to you too, right? So what drew you to Solar Integrated Roofing? What's so exciting about this? And what are you looking forward to about the challenge of doing what you're doing now?
Well, it's clearly the charisma and passion of Dave, his leader. I mean, he's built a business from nothing to a pretty substantial business over the last several years. And to look at the opportunity, I think we're just getting started. And so you sit back and look at the team, look at the people he's been able to attract, look at the business he's been able to build. It just seemed like the right place at the right time. And it allowed me to do something other than tech, which has been my historical background for the last 40 years. So it's a new challenge for me. I see it as a great opportunity. I love the guys. Dave's a great founder and a great business partner, and he's going to continue on the corp dev side, helping us kind of expand our business, because as he noted, we have acquired 14 companies. We're in the process of rationalizing that activity and making that into a very straightforward model by which we can grow. And Dave's going to be out front helping us do that.
Amazing. Okay, so now that we know that, we've set the base, we know the players, we know what you guys are working on, right? The uplist, you mentioned it very briefly there. When can investors expect that? What are some of the details? And also, what are some of the advantages after the uplist that you guys are going to be able to enjoy?
Yeah, it's a great question. And I wish I could tell you there's a direct line between having the desire to uplist and getting uplisted. There's a lot of moving parts there, not the least of which is completing all the necessary comments on our Form 10, which we're working through diligently now. We have a plan to uplist in 2023, and we're hoping to do it in the first half, but ultimately we'll be, guided by both NASDAQ, FINRA, and literally market conditions to get that uplist done. Now, you also asked, what does that mean to us? Well, it gives us greater access to institutional investors. Institutional investors give you a base that actually supports you through the ups and downs as the market moves, ebbs and flows, right? Retail investors tend to be more focused on the news in the here and now, where institutional investors tend to be focused on the long term and how the business will grow over time. So we're starting that process. I mean, we did that very effectively, Marty and I, who's my business partner from a CFO perspective, at our last company, which was Resonant, that we sold to Murata. We turned it from almost an all retail base when we started to greater than 60% institutional investors, which really gave us a lot of comfort on a quarter-to-quarter basis as we grew that business. And they got a great outcome, thank goodness.
Outstanding. Okay, now talking more about the business side, right? We've talked about the uplist. We know what to expect there. Looking at the revenue side of things, you had some extremely positive numbers from the Q3 report, very similar to our last company, actually, strangely enough. Walk us through some of those numbers, right, in this Q3 report. What are some of the highlights? What are some of the standouts? And do we see this revenue growth continuing as we move into 2023?
Here's what I'd tell you about that. At this juncture, clearly, we've been on board 2 weeks. We're diving in deep and on the revenues, making sure we're fully understand them, have them fully rationalized. And I think Dave and the team have done a fantastic job. If you look at year-over-year growth over the last several years, we're trying to make sure that we've got all the things buttoned up as we get ready for an uplist. Obviously, that's key and most important. I think for us, the thing that will really help us drive long-term future growth is the fact that we sit in a marketplace that has got a great pulling our vacuum into kind of up and to the right. I mean, my gosh, you've got a residential market that's almost 12 billion, growing at greater than 15%. The total market is over 17 billion, really approaching 20 billion, depending on who you listen to, growing at over 27%. We are deeply involved in the EV segment of the marketplace. That is growing at over 35%. And our anchor tenant there is our participation in a government program where they're installing 5 billion fast chargers. And we're one of 16 companies that was selected to go do that. So while I can't give you a direct forecast for 2023, and obviously as we move up to the NASDAQ, we're going to be very conservative about that, I can tell you that the future looks bright and the opportunity is there. We think we're at the right place at the right time with the right team.
Outstanding. And you mentioned a couple of things there that I want to hit on. And Dave, I'm going to turn it back to you for just a minute. Like George mentioned a moment ago, growing this company from nothing, right? When you look at your industry, what's changed over the last few years? How have you seen this evolve since you started the company in the beginning? And where do you see consumer trends and the way this industry is going to evolve moving forward over the next few years?
Wow, that's a great question. Obviously with the rising cost of energy, solar and clean energy is going to be I think it's going to be the choice for many Americans. And I think as we change from a gas car to electric car, everyone's going to need solar. They're going to need battery storage and EV chargers. So I think it's a paradigm shift that we're going through with commercial and residential solar.
Amazing. Okay, we have a little bit more to dig into on that shortly too. But as of right now, demand for solar in the residential and commercial sectors. Again, George, you mentioned this a few minutes ago. But how has it changed over the last 5 years? Has there been an increase, especially when it comes to, and this is the point we really want to hone in on, the conservation of the environment, people shifting over to renewable energy, people shifting over to a safer way to get our power, right? Have you seen this? Do you see this continuing as we move into the future? It's obviously contributed to so many people wanting to get into the space, but are we going to see that awareness for the environment and the renewable energy continue as we move forward?
Okay, well, you're gonna give that one to me, and I'm the new guy. Okay, great. Can we go back to meatballs? I mean, it's I guess foundationally, right? You sit back and look at the whole move towards ESG and being a better corporate citizen, and whether it be on the corporate side or on the consumer side, everybody is moving towards trying to be more environmentally friendly and more socially responsible. I think that fuels what's going on in this marketplace and is going to continue to fuel it for a long, long time. However, I do think we're seeing a rationalization of what those things mean, because 5 years ago, ESG was deemed a panacea that will solve everything. It's not. It's a metric. It's one of the things that we need to understand. It's how we will measure ourselves. People need to have a plan. They need to execute against a plan. That's a big part of what we're seeing out there right now, is guys are really trying to get a good solid plan. Clearly, a lot of the big box players are very, very focused in this area, trying to have a 20-year plan to get to a much more environmentally friendly footprint. That's going to be beneficial to companies like ours as we move to things like microgrids on farms that are selling off takes to the big box retailers. I think we'll see that trend continue. We're at the front end of that now. Clearly, there's some big projects going on out there in the marketplace. I think we are well positioned as a roofing and solar company because it gives us the ability to do things where other companies couldn't do. I mean, your typical solar installer doesn't have a true understanding of the engineering required to go do some of these big projects. And, that's an advantage that we have, and one that I think we'll continue to take care of.
Okay. Fantastic. Now, for both of you guys, right, either one really, with advances in battery technology specifically, how popular are home storage battery systems? Like Tesla's Powerwall, for example, how popular are those going to continue becoming? Do you see them being a big part of your industry moving forward?
Yeah, I think it's going to be the key to any solar system going forward. Obviously, with the fragile grid that we have, that's probably 40, 50 years old, and the blackout, especially in Southern California, it gives the consumer a chance to be independent from those. If they had a couple of them, if they can get enough storage, they can withstand a blackout for 2 or 3 days, which really, really important. I always joke with my clients when I sell one that, hey, you'll be the only neighbor who has cold beer in summertime, and that's kind of part of it. But and obviously with charging your car and having the storage at nighttime, it's important, and it can also offset some of the NEM agreement changes that they're trying to make. If you can have storage certain times of the day, it can also affect your electric bill for the SDG&E.
100%. That makes sense. And George, anything you would tack out of that? Is this going to be a big part of the business as we move forward? I mean, how do you see this industry playing out?
It clearly, as we sit down and look at it, whether it be for consumer battery storage, as Dave just described, or on the commercial side, I think that's going to be a very big piece of our business in the long term. Clearly, as we start looking at these microgrids, that's an integral component of the engineering of those systems, because they want to be able to flywheel through, outages or times of the day where they're not producing energy. So I think it's going to continue to be a big piece of what we do. It's going to be a big piece of the engineering that we do on a go-forward basis. And I think the advantage that we have, clearly, all these big players that are coming in with nice new battery storage solutions, whether it be the Tesla solution that you described, the Enphase solutions that are out there, or others, it just makes this kind of more mainstream, which is going to ultimately reduce costs for consumers, which creates a greater opportunity for us as we go deliver these systems into the marketplace.
Okay, so another question for George. Dave, you've spent the last 2 or 3 years successfully rolling up regional businesses, building the platform company that you guys have arrived at today. Speak to the synergies between those businesses, right? How does that help kind of each company work together in growing what you've done? Are there any synergies that have really helped develop this up to this point?
Well, I think where we see right now is we're a very nascent stage in integrating the businesses. I mean, they've been operating. Dave's been moving very, very quickly from an acquisition perspective. That's one of the things we're focused on critically right now is to combine those, kind of back end infrastructure so that as we make acquisitions, this is a plug and play entry point into our overall business. As you might imagine, Dave has combined 14 businesses, all of which at any given point in time in their history competed with one another. So now you're taking that, putting it under a single banner, and that is a cleverly disguised opportunities in some cases to get guys working together and pulling oars in the same direction. I think Dave's done a fantastic job of doing that up until this point. We're going to take that, institutionalize it so that as we go plug and play across the U.S., in the major solar states, that will be even a greater synergy and a greater opportunity for us, which will ultimately drop more dollars to the bottom, which will be great for our shareholders.
Definitely. Okay, great insights there too. Government incentives. Let's cover that for just a minute. We actually talked with another guest earlier in the show about the Inflation Reduction Act that Biden signed a few months ago. Do you see these incentives driving growth in the solar industry up to this point? And if so, or if not, either way, do you think government incentives are going to continue to catalyze this industry as we move forward?
Get after it there, big fella.
Obviously the government incentive and 30% tax credit is a great way to make the system for homeowners and commercial clients much more affordable. And it really, what they've done a great job of is packaging long-term low interest loans with the government incentives. So we have a zero cost of entry. We can immediately go in and save the client money. And at the same time, we can save them money on their tax credit. So it's a huge piece, and I'm sure as the administration is very green driven, that they will continue, and it's going to drive the business.
Fantastic. Okay, and another question too, just more about the business itself, right, and the formation of how we've gotten here. What are some of the challenges that your company has overcome, especially over the last few years, but since its inception too, right? Again, it's a burgeoning industry. ESG is still relatively in its infantile stages to what we all think it can become. What were some of the challenges for you guys overcoming building this company into what it is now?
That's obviously a me question. George touched on earlier, combining 14 different companies and the personalities, bring everything together as us all row the boat in the same direction is probably the most important and probably the toughest challenge that we had. But we have a great team. The future really bright. I mean, George hasn't talked a lot about his team they brought on with Steph and Marty, but we're poised to really bring this all together and get it working the most efficient way that it can.
Amazing.
Yeah, and I think, if you don't mind, I'll jump on this.
Yeah.
I think one of the neat things about the foundation that we built, clearly, we have an installation business, both on commercial and residential, and now EV. And that, in and of itself, for investors, is a great business. We can see great growth. We can see great growth over the next 5 years of where this business could grow to. If we can stay on a curve, even approximating what we've done so far, this is going to be a very, very large business. But the challenge you have for us as we look at those types of businesses, they have relatively low multiples when they get acquired, right? So, you have an installation business, it could be doing, an example, 500 million in revenue, and it's going to sell for 1.2 to 1.5 times revenues. Not typical for what I'm used to in the tech space. And so how do you change that and get into a multiple that will be much more interesting for investors? Well, what you do is you make your operations as efficient as possible so you grow the bottom line and build your war chest so that over time you get into owning your own systems from a commercial perspective, selling the PPAs, having a recurring revenue stream, and those recurring revenue streams are now what turn the corner on multiples and get you to a 3 to 5 times multiple, which is now what gets to be very, very exciting for shareholders, because they see that this thing has got a path and a trajectory where instead of being worth 600 million on a business doing 5, might be worth $1 billion, $1.5 billion. So clearly, that's the vision of kind of where we're going. It's built on a foundation that Dave started on the installation side. It's clearly something that we have got, eyes on the ball for, and something we get real excited about because it can change the trajectory very, very quickly.
Absolutely. Okay, great insights there. I have a final question for both of you guys. Dave, I'm going to direct it to you first, and then George, wrap us up. A recent Pew Research poll, it puts the percentage of Americans with solar panels installed on their homes at 8% currently, or probably a little bit higher as of now. When will we see this number north of 50%, and what has to happen to take this industry forward to see that number north of 50?
I wish that was a George question, but what's obviously driving the business is the cost of energy, and energy is going up. And some of the reasons that solar is not very popular in some states is because the energy companies aren't giving the homeowners the right credit for the electricity they produce. So that's going to have to change. But as energy costs go up, I'm sure the consumers will go up. Going north of 50%. I think that's probably 10 plus years away. I mean, here in California, we're going to have no gas cars in 2030. I think it was 2030 or 2035. So that's going to be, that's going to really affect California. California is obviously the leading state for solar and clean energy, and I think the rest of the states will catch up. I'm sure George can answer that question better than I can.
Let's talk meatballs. Okay. So I think the real thing here is Dave hit the macro points, right? You've got a $12 billion business growing to over 60 billion to reach that 50% penetration rate number. Wow, that's a tremendous opportunity. If we can just be a small part of that becomes a massive growth story for us. And we are just barely, chipping off the tip of the iceberg here. So I do think that we will see growth 10 years out, 50%. Probably going to be a tad longer than that is my guess. As you sit back and look at what's happening state to state, clearly, the 10 top solar producing states will grow faster, and everybody's going to be catching up. Now, does it get to 50%? Hard to tell, but even at 25%, you're talking about a market that's going from 12 to almost $30 billion. So I think that even if all we do is get sucked up into the tidal wave that creates, it's going to be a tremendous opportunity for not only us or the people that work for us, most importantly, and then our shareholders. So we're excited about that. It's something I think is going to be a lot of fun to be part of. It's interesting that in this business, there is no technology risk. This is hard work, doing things better, faster, cheaper than everybody else, and scaling. And, we're basically taking small independent businesses, rolling them into our business and growing from that perspective, and then making them better and expanding out and getting some intrinsic growth there as well. So I think it's going to be a lot of fun. We're poised to do some really fun things. Again, I'm not sure it's going to be as fun as making meatballs, but it will be a lot of fun regardless. And we'll probably be fitter. That's true, because we're humping camels on the roof. So it's all good.
It's a great perspective. Guys, you obviously enjoy what you do. You have a really impressive backstory and an even brighter future in front of you, obviously. It's been a genuine pleasure speaking with you both. Thank you so much for being here.
Yeah, thank you much. Appreciate you guys. Have a great holiday. Bye-bye.
Thank you. You as well, gentlemen. George Holmes, Chairman and CEO. Dave Massey, Co-Chairman of Solar Integrated Roofing Corporation, our final company joining us on All Access for the year of 2022 here today. As of today, All Access has ended for the year. We will be back in 2023. We will be rebranding to a different small cap series. A lot of work yet to go into what that's going to look like. A lot of improvements coming your way. The team is going to be working on it throughout the holidays. But for us, we want to thank the entire crew at Benzinga that made All Access possible, all of our sponsors that participated throughout the year, and of course, our sponsor Ticker as well, who's involved in every single show. We're going to play the video for Ticker one more time to close out the show. We'll go ahead and end All Access and show you how to get involved at ticker.com.
What is Ticker? That's right, Ticker with 2 I's, just like you. because it's for you, for investing, for stock perks, for connecting you to public companies who reward you as a shareholder, as a brand lover. That's why people can't stop tickering. Ticker, where investors discover shareholder perks and consumers become investors in the brands they love. Ticker. Start tickering today.
Fantastic. Everyone, of course, thank you so much for viewing all Access episodes throughout the year and all of the other Benzinga content we put out. We will be back in 2023. Everybody have a wonderful holiday. Aaron, Thomas, and I are going to go get some pizza. Everybody enjoy your weekend, and we'll see you next year.